trade and value addition, and examine the pivotal role that platforms such as the African Continental Free Trade Area and the G20 can play in shaping a more stable multilateral trading system. We aim to find mutually beneficial pathways for Africa and China to navigate this evolving landscape together. To officially open our proceedings here, it is my distinct honor to invite His Excellency Ambassador Wu Peng, Ambassador Extraordinary of the People's Republic of China, to the podium for his welcoming remarks. Ambassador, the floor is yours.
Thank you very much, Program Director, and your introduction. Distinguished Ms. C.D. Robles, I call you Elizabeth, should be, and Your Excellency Ambassador Mona Mubi Peter, Deputy Director General of DTIC. Ladies and gentlemen, dear friends, I'm very glad to attend today's seminar. In our world today, unilateralism, protectionism, and economic bullying are on the rise. In particular, the US arbitrary tariff hike have severely disrupted the global economic and trade order, dealing a serious blow to economic and social development and the people's livelihood in Global South, including Africa. I still remember last year I was presenting in this seminar. Time is flying, but in the past 1 year, especially the past 8 months, the world is changing. That said, I firmly believe in however, I just had a chat with Elizabeth. Although the difficulty is in front of us, however, I firmly believe in the resilience of African economy, which is fully capable of continuing on its path of independent development. These disruptions, the tariff disruptions, are nothing formidable. The earth will keep turning and life will go on. In the face of trade coherence and tariff blackmail, where lies the way forward for the Global South? That is the question. This has become a pressing challenge before us. Today's seminar is both very timely and meaningful. The US abuse of tariffs in essence deprives countries, especially the Global South countries, of their right to development. If the US is allowed to wantonly undermine the international order, the world will regress into a law of jungle, with the Global South becoming the biggest victim, I believe. Only by enhancing communication, coordination, and solidarity, and by upholding true multilateralism, safeguarding the international system with the United Nations at its core, and multilateral trading system with the World Trade Organization at its center, can the Global South countries effectively define international fairness and justice and truly protect our legitimate right to development. Let me brief, ladies and gentlemen, some new development, actually, especially between China and Africa. In June this year, the ministerial meeting of coordinators on the implementation of the follow-up actions of the Forum of China-Africa Cooperation FOCAC was held in Changsha, China. The meeting adopted declaration, which signed out a strong message of unity and joint efforts by the Global South to safeguard justice and development. In a congratulation message to the meeting, our President Xi Jinping solemnly announced a series of new measures to benefit Africa, in which the most important one is granting 53 African countries having diplomatic relations with China zero tariff treatment for 100% tariff lines through the entry into agreements on economic partnership or sharing development. This has ushered in a new charter of win-win cooperation between China and Africa. I know that Ambassador Molambi Peter, now you in charge of a very important task, how we can implement the zero tariff policy in South Africa. So I'm very glad today that you attending this seminar. This zero tariff initiative has been warmly welcomed by African countries, with more than 30 of them already signing the economic partnership agreement with China in a short period of time. That is the first step that we can deliver the zero tariff, because according to WTO rule, you cannot just give a particular country a tariff treatment unless you signed a kind of agreement. That is why I always said the unilateral tariff of the United States to the rest of the world is violate the basic rule of law of WTO. So should South Africa also sign such an agreement with China in the future, it would undoubtedly strongly boost exports of its competitive products, such as beef, cereals, and wines. It's not only just agriculture products, but other South African manufactured products, I hope. South Africa agriculture exports to China in principle are subject to the most favored nation tariff rate, which leaves them at a clear disadvantage compared with products from countries such as Australia and Chile that enjoy zero tariffs and free trade agreements with China. Actually, that happened many, many years ago, maybe 10 years ago, more than that. The South Africa Department of Trade, Industry and Competition has submitted to the Chinese side a list of top 100 products it hopes to expand export to China, which I note includes products previously exported mainly to the US, such as auto parts, organic chemicals, and plastics and related products. So I believe China's zero tariff initiative will provide South Africa with a pathway to effectively overcome some of the pressure of the US tariff and achieve trade diversification. Ladies and gentlemen, in recent years, under the guidance of Chinese and African leaders, China-Africa economic and trade cooperation has continued to deliver impressive results, pressing ahead with greater momentum, despite the headwind of protectionism. In 2024, China-Africa trade reached about $300 billion, marking a historical high for the fourth consecutive year. Among these, China imports from Africa totally $120 billion, up about 7% year on year. Of course, we can notice, you know, a little bit, trade deficit. In the first half of this year alone, China's trade with Africa amounted to around $164 billion, an increase of 14.4% year on year. China-South Africa Economic and Trade Cooperation holds a prominent place in this picture. China has remained South Africa's largest trading partner for 16th consecutive year, which South Africa has been China's largest trading partner in Africa for 15 years in a row. In 2024, bilateral trade accounts for nearly 20% of total China-Africa trade. Of course, we noticed that we should reform the structure of our bilateral trade. Yes, we import most part of African products in value is in mining products. But my argument is that is need a transition period. Rather, we no need to hate trade of mining, because mining can also create jobs for South Africans. Mining can also contribute GDP growth of South Africa. But of course, that is not enough, only shifted raw materials to faraway countries. We understand we leave more value added in South Africa, but Rome is not building in one day. We, of course, already make a lot of efforts in this sector. You know, China's the biggest refinery, melting more of ferrochromium is not in China, it's in South Africa. But unfortunately, recently we have to reduce, I heard from the company, the capacity of melting of the refinery, the ferrochromium, because they lost the money. And why? Because the very high or the increase of the electricity. I don't touch too much on that. In recent years, South Africa products has made their way into the Chinese market, allowing more and more Chinese consumers to savor the unique flavor of South Africa. I give you an example. In 2024, about 90% of South Africa's pecans nuts, the pecans nuts, and 50% of South Africa's macadamia nuts, is a little bit difficult word for me, export to China. 90% pecan nuts, 50% of macadamia nuts are actually export to China. You are the biggest consumer market. China and South Africa are currently in discussion on the protocol for the access of South African stone fruit to the Chinese market. After it is signed, it's very possible this year, just like your Ministry of Agriculture, John Steenhuisen, already said, South Africa's high quality peaches, plums, apricot, and prunes, a lot of different words of fruits, right? Will find their ways in steady streams to Chinese consumers. At the same time, China has been steadily increased our investment in Africa, giving strong impetus to the continent's modernization process and industrialization. Over the past 5 years, Chinese enterprises have maintained an annual average of more than $3 billion direct investment FDI in Africa. Moreover, the profile of Chinese investors in Africa has been increasingly diverse, with private enterprises emerging as a major force in investment and cooperation. The private company from China accounts for more than 70% of all Chinese companies investing in Africa. From the conclusion of the FOCAC Beijing Summit to the end of March this year, Chinese companies registered another $1.86 billion new investment in Africa and organized 18 matchmaking events for Chinese and African small and medium-sized enterprises. I would like to highlight in particular that during the fourth China-Africa Economic and Trade Expo this June, also in Changsha, Hunan Province, a number of cooperation projects were announced, most of which adopted an integrated model of production, supply, and marketing. These projects focused on industrial developments in key areas of China-Africa cooperation, covering agriculture modernization, industrial upgrading, and the application of new energy, and having been warmly welcomed by African countries. China-Africa economic and trade cooperation is thus evolving from traditional trade to deeper industrial collaboration, entering a new stage of jointly creating added value. This is a phenomenon I believe everyone should pay attention to. This year, South Africa hosts the presidency of the G20. China will actively support South Africa in fulfilling its presidency and will work with South Africa to make full use of G20 as a primary platform for international economic cooperation in order to resolve trade difference through consultation on the basis of equality, mutual respect, and mutual benefit, and to safeguard the multilateral trading system with the World Trade Organization at its core. China will also formally support the process of Africa integration and continue to assist the African Union and the African Continental Free Trade Area in their development. Actually, from the first day AfCFTA secretariat established in Accra, Ghana, Chinese government give them full support. In conclusion, I would like to express my sincere appreciation to the South Africa Institute of International Affairs, and especially to Elizabeth yourself, and to all the distinguished guests present today. I wish your seminar is a full success. Thank you very much.
Thank you very much, Ambassador, for those very insightful and thought-provoking opening remarks. I think I noted down 3 truths that I think can summarize the message and really lay the groundwork for the rest of our discussions. And that is, firstly, that the world is changing. Secondly, life will go on. And thirdly, that Rome was not built in a day. So we're now transitioning into our first main session of the day, a fireside chat that promises to be both engaging and very insightful. It's a unique opportunity to delve into the very heart of how Africa is positioning itself on the global trade landscape. And it is my great honor to introduce our distinguished speakers for the session. We're joined virtually by His Excellency Wamkele Mene, the Secretary General of the AfCFTA. And joining him for this conversation is Ms. Elizabeth Sideropoulos, Chief Executive of the South African Institute of International Affairs. Please join me in welcoming them.
Hi, good morning, everybody. Ambassador, DDG, also very good to have you here with us in discussions on South-South cooperation and global trade, and of course, earlier on discussions on G20 and trade, where again, our priority is WTO at the center of the multilateral trading system, as the ambassador said. So this was supposed to be a fireside chat. The last few days of winter in South Africa, we were planning to have a virtual fire happening, so it could be a fireside chat. But the Secretary General, unfortunately, wasn't able to fly down to join us. So we're going to have a chat. I haven't come up with a really interesting name for it, but maybe a screen chat or a virtual fireside a chat. So instead of standing here, because I think it will be easy also for the cameras, I don't know, sitting there, I'll actually stand here. I want to just make sure that the Secretary General is indeed online. Is he? And if so, it's probably better that he is on the screen rather than me. Okay. Your Excellency, are you on screen? Are you at your computer, at your desk? Just want to see if you can hear us. Can you hear us? I see you're unmuted. Oh, now I'm getting
Hello?
feedback. Yes. I think you have to turn off you have to mute one of the buttons so that we don't have feedback. We got that? Okay, right, excellent. Good morning, sir. It's very good to have you with us. Sort of the tariff wars and so on. The African Continental Free Trade Area is an agreement that, in fact, sort of swims against that particular trend. How can the acceleration of the free trade area help create the resilience, I think, that the ambassador spoke about in African economies from external shocks, from trade wars? Are in fact, paradoxically, the tariff wars exactly the kind of shock that we need to really drive the continental free trade area forward? Ambassador, were you able to hear the question that I posed? Do we just want to send a message, see if he's actually able to hear us?
Hello, Can you please, His Excellency is online, please.
Okay. Well, it all depends on whether the Secretary General is actually able to stay longer. So otherwise we can swap around. But Keller, can you actually hear me at all? Can't you hear me? Can you hear me?
Hello, good morning. Good morning.
To hear
Hi.
the question I posed.
I have
Were you
just
able
joined.
to hear the question?
I heard the question. I wasn't sure whether you are in discussion with His Excellency the Ambassador or myself.
Let me pose the question again. So the ambassador had obviously made the point about the last 8 months and sort of rise of unilateral protectionism and tariff wars and so on and so forth. And of course, the African Continental Free Trade Area is one of the agreements. One of the global agreements that actually goes against that trend. It's about creating a rules-based trading system on the continent.
Yes.
How will that ensure resilience in African economies, the point that the ambassador made, and also is the tariff wars paradoxically the kind of shock that we actually need to really, really drive and accelerate our efforts in creating an integrated African market?
Thank you very much. First, let me thank you once again for the invitation to join you for this conversation this morning. I think it's very, very timely, as evidenced in the in your introductory remarks. And I'm sorry I'm not able to join you in person. Couldn't travel at the last minute. I think this the current context that the multilateral trading system is in is certainly unprecedented since its establishment. That is to say, the establishment of the multilateral trading system in Marrakesh in 1994. We have never seen such an onslaught on the rules that underpin a certainty, predictability of markets, and as we have seen, rules that protect small economies from essentially the law of the jungle. So we are indeed in a very, very difficult time. I think you're absolutely correct. The trend in respect of Africa has been the opposite, and this has been a deliberate effort by the African Union, the Assembly of Heads of States and Government, to make sure that we see enhanced intra-Africa trade, intra-Africa investment, which, as you know, is less than 4%, and that we take very, very concrete legal steps to eliminate these intra-Africa barriers. As we speak today, there are 49 state parties out of 55, 49 state parties that have ratified the agreement establishing the AfCFTA. And essentially what that means is that all of these 49 countries have accepted the obligations to eliminate and reduce intra-Africa barriers to trade. Of those 49, there are 24 countries that have domesticated or gazetted, as we say in South Africa, that have gazetted the rules that shall enable the movement and the transit of goods in and out of a country. And so I believe the fact that we've been able to do this in less than 6 years underscores the political commitment, the political will, and the ambition to make sure that intra-Africa trade contributes to growth, to overall economic growth in Africa, contributes to industrial development, and contributes to Africa's competitiveness and innovation in the area of intellectual property rights. So I think that the enhanced protectionism, the enhanced investment protectionism, the enhanced industrial protectionism that we are seeing in the rest of the world. This is the opposite in the African continent. Now, the big question is, how does the African continent navigate this current context? How do we make sure that even as this economic gloom, certainly we know will have a devastating effect on primarily economies that have benefited from access to AGOA, Lesotho, South Africa, Angola, Nigeria, Madagascar. These are countries that will certainly in the short term experience very, very materially adverse effects. However, and this comes to the heart of your question, it compels us to reflect on what is it that we need to do to successfully insulate Africa's economy from the current storm that is taking place. And so I believe that in the medium to long term, we have an opportunity in the medium to long term to ensure the economic self-sufficiency of our continent. A market of 1.4 billion people with a combined GDP of $3.4 trillion is a significant market. It is, however, a very fragmented market, and that's why the AfCFTA exists. I am very convinced that in the medium to long term, the AfCFTA will enable us to establish a domestic market such that the percentage of market share or market access that, let's say, South Africa has lost in the auto sector in the US, that we can actually pivot to a more dynamic, a fast-growing market that has all the attributes of economic growth projected up until 2050, when the continent of Africa is set to have a combined GDP of 16.5 trillion United States dollars. And so I think that, yes, it is gloomy. However, this crisis is an opportunity for us to pivot into building a domestic market, building a market that will enable economic operators up and down the length and breadth of our continent to have access to new markets. The last point I would make in this segment is that around the world, countries of the South are facing the same, if not a similar, if not the same predicament, and that is how do you overcome this chaotic context of trade rules not being adhered to. And so we've got to continue to build these partnerships, not just on rhetoric or political rhetoric, but to build partnerships that are founded on trade and investment. China announced over 30 countries will now enjoy duty-free, quota-free, over 30 countries in Africa will now enjoy duty-free, quota-free market access in the Chinese market. We have started discussions with the UAE. We have to broaden our partnerships to even Latin American countries that have a similar commitment to principles of trade law, and to, more importantly, to ensuring that trade and investment does lead to inclusive growth in country and amongst countries. And so this, I believe, is the paradigm that we're facing, at least we know for a fact, at least for the next 3.5 years.
Great, thanks. Thank you very much. I want to pick up on the point that you made a little earlier, where you said, firstly, this is an opportunity. What we're going through is absolutely an opportunity. That already we have 24 African countries that have domesticated the agreement, and that's the basis for then our trade to begin. But if you were to identify 2 or 3 key bottlenecks domestically in African countries or in the regional economic communities that we would need to overcome in order to be able to move beyond the fragmentation that has the economic fragmentation that has characterized the continent, what would those be?
The trade rules are now there. The rules that enable the trade, or should enable the trade to happen, are there. We concluded a very comprehensive trade agreement, a trade agreement that is ambitious both in depth and in scope. We negotiated that agreement in about 5 years. So the rules are there. What is required is for us to invest in industrial development in Africa, establishing value chains, whether it is the pharmaceutical sector, agriculture and agro-processing, the automotive sector, the real drivers of Africa's economy and industrial development. So we've got to strengthen the partnerships with our development finance institutions. This is challenge number one. Challenge number two, the cost of infrastructure continues to be high. So we know the AfDB estimates that the cost of the infrastructure deficit in Africa annually is at $170 billion. So this is if we don't have trade supporting infrastructure that connects our trade corridors, that connects the northern corridor to the Maputo corridor, for example, we will continue to have these we will continue to have low transit of goods in an efficient manner. So investing in infrastructure, crowding in private sector investment, whether we are talking about private equities, sovereign wealth funds, this is the third important component, that the second rather important component that I would say is a priority. I would also say that although at law we have rules that enable customs systems harmonization and cooperation in the implementation of customs rules, the fragmentation obviously continues to happen. I drive across borders, whether in West or East or Central Africa. I drive across borders and I see it with my own eyes, that the customs system achieving an integrated, interoperable, and digital customs systems is going to be where the agreement turns in terms of its success or not. So I think I would say all of the essential factors to enable success really depend on partnerships and collaborations outside of the trade rules themselves. The African Union does not have a balance sheet to invest, to deploy capital in infrastructure. We rely on our partners for that, and correctly so. And so I think that the success will really reside in our capability to collectively invest in trade supporting infrastructure, in industrial development, in special economic zones, enhancing our productive capacity as a continent, and then continuing to implement the rules on customs systems harmonization.
Great, thanks very much. I mean, you've also touched on an important issue. I mean, there are the points you've highlighted have two dimensions. The one, of course, is what we do within our boundaries, within our borders, both nationally and regionally. It's also about creating opportunities for bankable projects and so on, and sort of harmonizing our customs, etc. But then there is also the other dimension, which has also been something highlighted by the South African G20 presidency, which is really the high cost of capital and being able to access that for developmental projects on the continent. I mean, are we leveraging? I mean, there are a number of initiatives, not least, and this is also the focus of our discussion this morning, the sort of initiatives by China, particularly the Belt and Road Initiative. Are we leveraging these sufficiently? And what others are there that we can be doing much more with in terms of international partnerships?
I think that the investment by China in particularly on infrastructure in Africa has been absolutely transformative to many countries, and we need more of that kind of infrastructure investment, again, particularly infrastructure that supports that supports trade. We do see other partners who are equally increasing their investment in Africa. We see the UAE, we see Saudi Arabia a few years ago in November 2023. We had a very successful summit with Saudi Arabia that resulted in commitments of significant amounts, up to $50 billion to invest in infrastructure primarily. So I think leveraging on development partners for investment, not aid, but for investment, and for them to see commercial price returns on their investment in infrastructure is absolutely key. Let me just, if I may, just touch on the point you made about the cost of money. The risk premium for African countries, as you know, and all of us do know, it is disproportionately high. An African country is set to borrow at 8 times more than, let's say, an OECD country such as Germany. And so the cost of global capital associated with the risk, as you correctly said, risk premium, which we believe is not supported by the evidence, nonetheless shuts out many countries out of access to global capital markets, particularly private capital. The good news is this: there is a significant amount of private sector capital in Africa. And what we have got to do more as policymakers and as the African Union in particular is to ensure that we build the confidence either through rules, adhering to contracts, adhering to our own agreements. So the rule of law is absolutely critical to ensure that our own investors, I'm not talking about foreign investors, to ensure that our own investors have the confidence to deploy the capital that we do know that they have, to deploy it in infrastructure development in Africa on mega projects, whether we are talking about industrial development or infrastructure development. And second, I think that we have to have a very important ongoing collaborative dialogue with the private sector in Africa, which again, I would be the first to admit that at the level of the African Union, it has not happened. We have not taken enough steps to ensure that we bring on board African private sector so that we can collectively tackle these challenges of lack of capital being deployed by our own private sector. We rely largely, the continent of Africa and many countries in Africa rely largely on the combined balance sheet of African Development Bank, Afrexim Bank, Africa 50, which is probably at around $160 billion. And this is nowhere enough. This is nowhere enough for us to be able to address the infrastructure deficit. We require more. And I believe that the private sector does have the capability, whether we're talking about in terms of technical capacity, or obviously in terms of the capital itself, does have the capability to make a very important contribution. And I am happy that the new leadership of the African Union fully recognizes this point about the need for private sector engagement.
I mean, absolutely. The point about confidence of our own private sector on the continent to actually invest in the continent is the first step. I mean, if you don't have confidence to invest in your own country or in your own region, it's really difficult to convince foreign investors to do otherwise. So I think that's extremely important, and it certainly is something that is so critical to mobilize. I mean, we've been talking about, and just as an aside, it reminds me of a discussion, a presentation that was made at the B20 launch meeting earlier this year, where Strive Masia was talking about how they mobilized as private sector together with the African Union to get vaccines and other medical equipment to the continent. And he said, wow, if we can do that so quickly, and we worked together so effectively, what could we achieve if we actually were able to roll that out
Yes.
across the board. So that was a really interesting story that he was involved in and was able to tell. But we're talking
$200
about
million, $200 million, they raised $200 million in less than a month. This is the African Union and private sector. And so I fully endorse the point that he made, that where we collaborate, we do have the capability. $200 million raised in less than 1 month between private sector leadership and the African Union is an example of what we're capable of achieving.
Yeah. So it's the crisis. So I'm sort of thinking, well, now we have a crisis, and maybe this can actually another crisis, and maybe this can drive us. I want to maybe just ask you one more question, and then if you have time, Secretary General, we can then revert to the audience here for a couple of questions before I release you. And the one really relates to the AfCFTA investment protocol, which intends to harmonize, facilitate investment across the continent. It's pivotal to what you're saying. What are the timeframes that we're looking at in terms of being able to actually see some real benefits, given that it's African countries at the domestic and the regional economic community level that really have to drive this and harmonize and facilitate its implementation?
The protocol on investment is, well, just like all other subsidiary instruments of the AfCFTA, is the first of its kind. It really presents an investment proposition to not only foreign investors, but primarily to domestic investments in Africa. The rules that we believe will further liberalize and increase intra-Africa investment from the current 4% to a much higher percentage of GDP per capita. This is the primary objective of that protocol. The transition period is 5 years. So in other words, state parties to the agreement, countries said, we need time to adjust our domestic laws and to align them with the requirements of the treaty. So, for example, in establishing transparency in issuance of permits for a regulator by a regulator for a telecoms communications company, all of those things require some degree of domestic reform, a very high degree actually of domestic reform. And so the 5 years may sound like it's a long time, but it is a relatively short period of time to make that adjustment and alignment. We are already on year 2.5 in the implementation of the protocol. We will have to work very again collaboratively with the private sector. The protocol on investment is not going to be implemented only by governments. The private sector must be also a co-leader in the implementation of the protocol. There's also a very interesting dimension of the protocol on trade and investment, which has been placed now at the fore by the climate change crisis. And that is the provisions of the protocol that relate to adaptation and mitigation and the kinds of private sector, green industrialization, green trade investments that have to be mobilized. You know as well as I do that the continent of Africa receives less than 1% of global capital that is directed to climate change, and this is private capital that is directed to climate change. And so it is forward-looking also in that sense that it has encapsulated very strong provisions of the imperative for climate change and how we as Africans can leverage on the crisis of climate change, not only to address the environmental imperative, but also industrial development through green industrialization.
Great. Thank you. I'm going to ask the audience if there are any questions. I mean, I have a couple more follow-up, and the one observation I want to make, of course, is that when we talk about the African continental free trade area, we're always thinking about policymakers. But the Secretary General again made the point about the importance of the private sector. At the end of the day, the success of the agreement is going to be driven by the private sector. I recognize a hand over there and a second hand there. Do we have a mic? Yes, please introduce yourselves. No, the lady behind. I think it's a lady.
Morning, everybody. I'm Olga Mashilo from Bolengbuntle Consultants. I've got a question with regard to the implementation of the AfC agreement. The question is that how do you ensure that there is no bullying, more especially because there should be a political will from all governments when it comes to the implementation of policies. You're looking at how we lost, as South Africa, we lost about 600 tons that went through to Maputo corridor that is going up to Africa from Durban port. So when you look at that, how do you ensure that there is no bullying in the standardization of policy making and also the open border post with regard to looking at our agriculture, our agricultural products, and also the automotive, because yes, we are having a lot of Chinese automotive parts or vehicles coming through South Africa, but at the end of the day, our infrastructure is not suitable for most of the products that are being sent via our corridors.
And Gustavo over here.
Good morning. I'm Gustavo, a senior researcher here at SIDA. Secretary General, you mentioned a number of very interesting things, but the one thing that for me was fascinating to hear is the idea of the cost of money within the continents. So there is, of course, the cost of money when it comes to loans and the price that we pay, but also cost of money when it comes to cost of transactions, to issues like exchange rates and so on. So my question in that regard is how processes like payment system and its, can you
I lost Gustavo when he said how
Battery
processes.
problems.
Okay. I will finish the question very quickly now. But so my question is in regard to how initiatives like the African payment system and the implications for reducing costs of transaction within the continent, reducing fluctuation of exchange rates and access to foreign exchange, especially in line with some of the points you mentioned about increasing regional supply chains, increasing industrialization, and creation of new value chain developments within the continent. Thank you.
Great, thanks. Secretary General, 2 questions. Revert back to you.
I'm happy to take 2 more, if that's
Yes, we have a gentleman over there. Is there a 4th question? Going, gone. Okay.
Thank you, SG, for the points that you made. I've got 2 questions. Question number 1, you indicated the infrastructure deficit, specifically the rising cost of energy, is something that also Ambassador Ye has touched on. He touched on something that is so painful. He said there is a Chinese company in South Africa that he was dealing on chromium smelting. That company is cutting production because of high energy cost. Is government doing something to make sure that doesn't happen, to stop this bleeding? Number 1, does government make sure that it is in touch with these investors to hear the concern, especially on the issue of infrastructural bottlenecks. Number two. Number three, I understand that there are special economic zones, about 3 in the automotive sector, 1 in agro-processing, but I haven't heard of a special economic zone under mineral value addition, beneficiation. That will be quite paramount, critical, especially in this time where we're experiencing high energy cost. Why am I saying so? Is that if these investors may be allowed to operate in such a special economic zone, then they have a reason to offset the energy cost that they're incurring to the tax holidays offered under the bracket of the special economic zone, under beneficiation in particular. Then you also indicated the engagement between South Africa in particular and the UAE. So this you might have heard, SG, that on the first state visit, the US president, when he engaged the Gulf states, one of the discussions that they made was that the Gulf states have to secure critical minerals for the US within the Gulf and through Africa, from Africa. So what are policies that our governments are putting in place to make sure that we don't go back, we don't reverse to go to the extractive nature of the relationship that we are currently facing? Thank you.
Great, thanks very much. Over to you, SG.
Yeah, thank you. Thank you very much. First, I just want to be clear. I do not speak on behalf of the government of South Africa. I have no authority to speak on behalf of the government of South Africa. I am not an official of the government of South Africa. I have no mandate. I have been speaking purely on behalf of the African Union. And so I'm not able to answer questions that relate directly to South Africa. However, what I will say is first on energy, the energy insecurity crisis is impacting on a number of quite a lot of countries throughout our continent. We see this as a big constraint, obviously, to industrial growth and industrial development and manufacturing capacity, and even in the services sector. However, through the Africa Green Industrialization Initiative, which the African Union is leading through President Ruto, and I am the Sherpa of that initiative for President Ruto, we are seeing quite a lot of commitments to invest in solar, in renewables, in hydro. The effort to direct investment in renewable energy for energy security requires, once again, that we work with the private sector. Next month, President Ruto at the Africa Climate Summit will announce to the African continent the measures that we seek to introduce that are aimed not just at adaptation and mitigation, but also, more importantly, that are aimed at ensuring Africa's energy security through green industrialization and green trade. In regards the critical minerals, I'm paraphrasing now, the need for us to enhance our capability to invest in critical minerals. This is, of course, a matter of, I think it is trite that we can no longer export unprocessed commodities to the rest of the world. I am encouraged by what I see in some parts of the continent. So, for example, DRC and Zambia, the first of its kind around the world, a special economic zone that will be focusing on the production of lithium batteries to power electric vehicles as we transition in the industrial revolution of the auto sector. So there's an example of the kind of investment that is private sector led, a syndicated investment, private sector, development finance institutions, in this case, AfriximBank, and private sector and banks, commercial banks, that are investing in that special economic zone. As regards the second question on the cost of money, absolutely, Gustavo, you've hit the nail on the head. The cost of money is in trade finance, in infrastructure, and as you mentioned, the cost of transactions. Between Ghana and Kenya, where I live, there's a direct flight. It's 5 hours. Before the AfCFTA and AfriximBank, if I was transacting with a counterparty in Kenya, I would have to use a platform that takes me to a third country outside of the continent. There is no reason why money should not move directly as an aircraft. There is no reason why we should use a correspondent bank outside of the African continent. And so the Pan-African Payment and Settlement System is a digital platform intended to reduce the cost of currency convertibility, the cost of trade. We continue to rely, unfortunately, on third country currencies for intra-Africa trade. So the Pan-African Payment and Settlement System is intended to enable payments in local currency. I am in Ghana. I transact in the Ghanaian cedi. My counterparty is in Kenya. My counterparty receives Kenyan shillings. Digital platform, instantaneous, 90% reduction in the cost of the transaction. These are the interventions that are required to not just the trade rules, but these are the other tools that are required to ensure that indeed we reduce the cost of trade, we enable small, medium enterprises and young entrepreneurs to be part of intra-Africa trade. So the inclusion aspect is very, very, very important. And I will just underscore this point by making an example. We know that today there are informal traders who use digital platforms for trade. A remarkable story about inclusion of trade in Africa. So this deploying digital tools will help us to overcome some of the challenges that we've faced for many, many years. The first question, one of the reasons why we correctly are deeply concerned by the actions of the United States in respect of the multilateral trading system is because there's no respect for trade rules. Trade rules are being violated with impunity. We seek to ensure, we must ensure that trade rules are adhered to. That means that starting with the AfCFTA, we've got to agree, we have to assert rather, the rules that we have agreed to. And so in respect of transshipment, we have to invoke the rules. In respect of the tariff phase down approach that we have agreed to, we have to respect all of the modalities of the agreement that enable trade to happen in a predictable and predictability and certainty is absolutely key. And so I want to assure you that at least at law, there is no bullying that is going to be tolerated because the rules are very, very clear. Of course, at national levels, at regional levels, governments will have to apply the rules as they trade amongst themselves. The issue of open borders, as you know as well as I do, the aspiration of the African Union from its founding in May 1963, the Organization of African Unity, is the complete integration of the market in Africa. Obviously, it is taking us a very long time, but open markets, interconnected markets integrated economy through these rules that I've mentioned. That's the end goal. So that means that we've got to accept that there will be movement of goods. There will be movement of goods across borders, and there has to be, it's not happening yet, and there has to be movement of persons across borders so that the business people that are required to power these transactions, or rather to initiate these transactions, that they can move through the continent seamlessly. And so movement of persons is a very, very important pillar of the implementation of the AfCFTA and indeed of the African Union itself. It is unfortunate that the Protocol on Movement of Persons of the African Union has been ratified by only 4 countries, but we are beginning to see some countries taking the initiative to liberalize their movement of persons arrangements. Visa on arrival in Kenya, in Nigeria, in Rwanda, in Ghana. These are very, very important steps, particularly for intra-Africa trade and particularly for our business people to be able to take advantage of this vast market. I think that where there are security questions that arise, there is technology that can actually resolve those security questions. Where there are immigration questions that arise, we've got to apply the relevant rules as opposed to immigration rules being applied to trade rules. I do know that, of course, this is a very, very sensitive matter throughout the continent, but I believe that we all have to confront this challenge of the difficulty of movement of persons on the African continent.
Great. Thank you very much, Secretary General. I think a round of applause, everybody.
Thank you.
We're very grateful that you've taken the time to be with us and to also answer questions from the floor. I think it's been a really good engagement. And again, thank you very much for making the time, Secretary General. It's good to see you.
Thank you very much. We'll see you next time. Thank you. Thank you for having me. Thank you.
Should I just go straight ahead, because we're probably running a little late and I also don't know what Ambassador's time is like. But it's really a great pleasure to welcome again to a SIRE-related platform, Her Excellency Ambassador Olelwa Mnumbi Peter, who's the Deputy Director General at the Department of Trade, Industry and Competition. Ambassador, over to you. Maybe you'll answer some of the South African questions.
Thank you very much for the invite, Excellency Wu Peng of the People's Republic of China, and of course, Excellency Wamkelemene, the SG of the AfCFTA, distinguished guests, ladies and gentlemen. It's really a pleasure for me to be here and to share some perspectives on these interesting topics. I think as both Ambassador Wu Peng as well as the SG have indicated, we are witnessing seismic shifts in global trade. And the SG also indicated that this is really unprecedented. We've never seen how global rules are ignored, how unilateralism and protectionism has effectively risen to the extent that it has. Of course, what we're seeing in our view is driven by the fact that there is reordering of the global order from a unipolar to a multipolar world. And I think some of the countries are struggling with that shift. What is worrying, though, is the fact that we are seeing departures, especially by countries of the global north, from the very rules that they crafted and actually even driven and promoted eagerly during the period of hyper-globalization. The rapidly changing global geopolitical landscape is marked by intensifying competition. We are also witnessing a shifting global alliances, contestation of the norms that have always actually guided us. Importantly, we're seeing a rise in economic uncertainty as well as trade policy uncertainty. And this is also leading to growing geopolitical tensions. So effectively, what we see is an unstable, unpredictable trade environment. And it's not doing well for business. And there are worrying trends, especially among the private sector, because you see global rules changing on a daily basis, and I'm probably also exaggerating. We had, as South Africa, been hosting a G20 Trade and Investment Working Group. And the last one, which was the third Trade and Investment Working Group, was held in July in Johannesburg. We had an interesting presentation, joint presentation by the OECD, the WTO Secretariat, as well as UNCTAD, on the effects of the current trends and the direct implications, especially for developing countries and in particular African countries. There are 5 trends that came out of that presentation. The first one is the fact that trade policy uncertainty has increased in 2025. 2, global supply chain pressure index shows that the supply chain stress is on the rise. Thirdly, according to the Purchasing Managers Index, new export orders are contracting. 4, even though global trade that is taking place under WTO rules is still high, there is a significant decrease from 83% in January 2025 to 74% in May 2025. 5, that the reciprocal tariffs and the spread of trade policy uncertainty would also further deteriorate the global outlook, both in terms of GDP growth as well as merchandise trade. And in this regard, there is a WTO report of 2025 on the global outlook with regards to merchandise trade. And here the WTO noted that grimly, that global trade has entered a period of heightened uncertainty driven by a resurgence in rising tariffs, and that the WTO forecast a minus 0.2% contraction in merchandise trade in 2025. Of course, there is a chance that we could recover in 2026, but it depends on whether countries will exercise due restraint in terms of unilateralism as well as protectionism, and of course, if we don't see trade wars. Now, if we look at the impact, of course, it varies from country to country, including the exposure of countries, especially to the US, given the reciprocal tariffs. But what is clear is that globally, from that joint report by these 3 institutions, that there are specific sectors that will be negatively affected, mainly the auto sector, steel and aluminum, as well as agriculture. Agriculture, I guess, is because of the fact that you have perishable products and it's difficult to quickly find markets, especially given that you have to negotiate specific protocols to access the market. And of course, autos and steel and aluminum is because of the Section 232 duties that also sometimes increases. You'd be aware that there's 25% on autos and auto parts. Then it was initially 25% on aluminum and steel. It has now been increased to 50%. So all of these uncertainties have significant implications. Of course, developing countries, because they are reliant on trade, they are unfortunately facing a disproportionate impact when it comes to these changes. But also worrying for us is that the unilateral approaches are leading to fragmentation of international trade. And we have been aware, and I think COVID was a clear indication of how interconnected the world is. So there's no one country that can think it can produce everything it needs. Unfortunately, or fortunately, God has granted us with various endowments. and those endowments do not exist in one country, and therefore we need each other to be able to survive. So it's a pity that we're seeing a situation where some of the countries are cutting themselves out and trying to reorder the global supply chains in warring trends. Of course, we are of the view that we need to preserve the multilateral trading system because of this interdependence that I've referred to. But our support for the WTO is not blind to the fact that the WTO for a long time has had its own shortcomings, that unfortunately it has not sufficiently reformed to be able to respond to the concerns that both developing countries have been raising, but also now increasingly developed countries are raising. We therefore believe that we need to have a focused discussion, both inside of the WTO, and we are worried that the WTO and the discussions in Geneva, of course, they have started now under the facilitator role of the ambassador of Norway. However, we don't believe that they are focused enough to get us out of the current challenge that we have. What is important to us is that whatever discussions we're having on how we reform the multilateral trading system, there are underpinning principles that should inform such a discussion. One, it's a recognition of the fact that, unfortunately, global trade has not really resulted in inclusive growth and development. Two, we have to recognize that countries that are members of the WTO are at different levels of development. Therefore, you cannot have a WTO reform discussion that tries to constrain access to special and differential treatment for developing countries. And therefore, it's going to be important that whatever discussions we're talking about must reinforce multilateralism, because as SG has said, if we don't have multilateralism and multilateral trading rules, we are going to have the law of the jungle. And the law of the jungle, unfortunately, hurts more developing countries, and in particular, least developed countries. Three, global cooperation has to underpin everything that we do. Unilateralism and protectionism, unfortunately, does not help anyone, but actually hurts all of us. Having mapped out the challenges and also the fact that these warring trends of unilateralism and protectionism are really hurting developing countries, and as the SG has said, I want to echo his words. With every crisis, there's an opportunity. Here we see an opportunity to fast-track intra-Africa trade, fast-track the implementation of the AfCFTA, and fast-track the outstanding negotiations, especially on the remaining 10% of the tariff lines, as well as to conclude the outstanding rules of origin. As the SG has said, we have made significant progress under the AfCFTA. 94% of the rules of origin and have been negotiated and agreed. Of course, the remaining lines where we don't have rules of origin are actually the sectors that are currently facing significant challenges under the changing global climate. So the conclusion of the rules of origin negotiations on autos is going to be absolutely important to really unlock the potential that is presented by the AfCFTA, but also the rules of origin on clothing and textile, because a number of African countries depend on this sector for their own economy. But also important for us is the fact that if we do implement the AfCFTA, and I must also indicate that we're seeing a lot of take-up by South African companies in taking advantage of the AfCFTA. Between February 2024 and July 2025, the trade, and I'm talking about our trade beyond SADC, because under SADC, we've already been trading under the SADC FTA. So new trade that has been unlocked by the AfCFTA, we've seen our exports from South Africa grow to 1.9 billion rands. And these are value-added products that we're exporting that are contributing to both jobs in South Africa as well as industrial development in South Africa. And of course, over time, as a number of countries domesticate the AfCFTA, we're gonna see a lot of that trade increase. UNECA estimates that through the removal of tariffs alone, intra-Africa trade could grow by over 50% by 2040. And therefore, for us, if we want to build a resilient African economy, boosting the intra-Africa trade is going to be important. But I think also linked to this is the fact that for intra-Africa trade to work, and SG has also referred to the fact that yes, we have a huge market of 1.4 billion people. The issue is that the market is fragmented. So you can't talk about the implementation of the AfCFTA only through the removal of tariffs and the non-tariff barriers. What is also important is to augment this through infrastructure development and to augment this through building regional value chains. And this is work that we are actively pursuing as South Africa, working with our private sector so that we can see the value chains. In fact, speaking to the auto sector, we're working quite hard, not only with the other countries beyond SADC, but also starting from SACU to look at the auto value chain and to launch an auto pact that will really unlock opportunities when it comes to the regional value chains. Now, coming to South-South cooperation, what is clear to us is that in a fragmented world, South-South cooperation presents huge opportunities for growth. But also for South-South trade to grow, I do believe, again, that there are a number of underpinning principles that should guide how we cooperate. One, an investment-led trade strategy. The reason I'm raising an investment-led trade strategy is that if you look at the continent, we are a part of a number of value chains. However, we are locked at the lower end of the value chain as just a supplier of primary products. Ambassador Wu Peng spoke about the minerals that we are supplying also to China. Even in South Africa, over 90% of our exports to China are raw materials. Yes, it contributes to jobs. Yes, it contributes in terms of our own GDP. But as Ambassador has said, that cannot be enough. It cannot be that in 2025 we continue to export raw materials, because by so doing, we are exporting jobs. We are not really creating value in our economy. And therefore, for us, this investment-led trade strategy is what we're pursuing, and we are working very well with the People's Republic of China in terms of what we call a trade and investment package. That trade and investment package aims to mobilize investment from China so that we can boost the productive capacity of South Africa, and then it's only by so doing that we'll be able to beneficiate our resources in South Africa and ensure that we're able to export value-added products. So that is absolutely critical for us as part of our resilience building strategy and diversification efforts. The second principle is going to be that we need to establish additive relations, not relations that are based or defined by extraction of raw materials, but rather beneficiation of critical resources at source or as close to source as possible. To answer the question about whether South Africa is looking at an SEZ that can promote the beneficiation of minerals, yes, we are. There's the Bujanala and Fetahomo Tubatse Special Economic Zone, where we are looking at, and that's also one of the SEZs that we are prioritizing in our discussions with China so that we can ensure that there's beneficiation of ferrochrome in South Africa. 3, the third principle is we need to establish South-South relations that are based on complementarities. Fortunately, in a number of sectors, we tend to be competitive, but there are areas where we can identify complementarities between countries of the South. Luckily, if you look at China, for example, China is now moving up the value chain in terms of where it is because of the technologies that China has been able to develop in a short space of time. So that is leaving space in the lower end of the value chain for other countries of the South to take the space. So it's going to be important as we engage in South-South partnership to identify the scope of where, for example, as South Africa, in the global value chain we can play, so that as China moves up, we occupy the space not just as the supply of primary products, but we can have some processing that takes place in South Africa before products are exported to China, for China to do more sophisticated processing. So we do see opportunities for complementarities even as we have similar production structures. 4, the sharing of technologies is going to be important. You know, the challenge that we've had and the COVID-19 experience is a serious experience that we need to learn from. What we saw during COVID-19 is the fact that a number of countries that own the technologies hoarded the technologies. But I think as countries of the South, having had that experience, it will be important to look at how do we partner in terms of technology transfer and technology cooperation to ensure that we are able to diversify the manufacturing base among ourselves. Lastly, the principle that I think is also critical is a need to create alternative development models. Development models that foster, 1, growth of regional blocks, 2, that foster the development of new institutions that can be the basis for collaboration among countries of the South. BRICS is an important platform, and I do think that we need, especially in the current context where we are seeing these seismic shifts in global trade, that we need to now foster real cooperation, economic cooperation as BRICS countries. In fact, we are now working on a strategy, economic strategy for 2030. We had a 5-year strategy that ended in 2025. So Brazil is continuing to ensure that as they chair the BRICS this year, we finalize that strategy that will really foster real cooperation among countries of the South. Of course, importantly, a new initiative such as that announced by China, where we can look at how do we open preferential access for countries of the South in key economies. And China has, of course, made the announcement of a 0% tariff for 100% of our tariff lines for 53 African countries that enjoy diplomatic relations with China. It's a good initiative that South Africa welcomes. And of course, as Ambassador has indicated, there seems to be an expectation that we need to negotiate an agreement. It's going to be important that we thoroughly assess what are the implications of negotiating such an agreement, and how do we, as even we negotiate this agreement, we take into account the sensitivities that South Africa would have, and that again, this agreement is based on additive relationship that will support South Africa, and we negotiate a SACU when it comes to tariffs that will ensure that SACU is able to boost its productive capacity as we engage with China. But this is really a welcomed announcement that has been made. As I now move to conclusion, in terms of the G20, as I said, I started off by saying what are the discussions that are taking place at the G20 and what is the picture that is emerging in terms of the current context. As South Africa, we see value in leveraging the G20. And I think the G20 presidency for South Africa has not come at the best time. I'm not going to say worst time. It's the best time. Because for me, again, I see an opportunity here. South Africa is now at the center of shaping what the future of global trade should be. Through the G20 presidency, we have launched a brainstorming session that allows and provides a platform among G20 members to say, we know that global trade has been under pressure for a long time. It's not only from the US. Unfortunately, now, of course, we look at only the US. We've seen unilateralism and protectionism from also other members of the G20. In fact, there is a study that shows that unilateral measures have risen among G20 countries by a significant margin. So effectively, there's a G20 discussion that needs to take place. And we are not shining a light on any one member's measures as we engage in that discussion. The aim is to have a forward-looking agenda on what should shape global trade going forward as we prepare for MC14. So forward-looking agenda and solution-oriented agenda that we're looking at. I know I see the chair is already trying to remind me that I'm over time, but maybe as I close, I'm going to say that the question was for today, can South-South cooperation be the answer to enhance global trade cooperation amid rising protectionism? My answer is, without a doubt. But two, success would depend on how we structure our relations for mutual benefit, and also how we ensure that we create sustainable and stronger relations among countries of the South. Thank you very much.
Thank you so much, Your Excellency. And I was trying very hard not to rush you because I was finding it very interesting. But we are running a little bit behind schedule. So we would like to just let you, those in the room, to stretch your legs a bit as I ask you to come to the front for a very quick family photo. If I can ask both ambassadors to sit here with Elizabeth. And then the rest, please come around the edge. As you walk back to your seats after the photo, please come forward. After the photo, you can pop outside and get yourself a little bit of finger food and some coffee, but please be seated very promptly before 1:15 for the next session.
I'm very honored.
Just take a seat.
Take a seat.
If it doesn't. Can I ask you just to sit here, and then I'll just quickly introduce you? So do you want to sit here for now? Yeah? Okay, good. After the excellent foundation set by Her Excellency, we're going to move into the next session. It's a presentation by my colleague Muziwetu Ndlovu, who I'm going to ask to come walk up to the podium as I introduce him. The foundation set by Her Excellency was really emphasizing the importance of both the South-South cooperation as an opportunity and also that we might need to start thinking about alternative modes. And really this is the setting that Muzi will speak to in his presentation, is really looking at challenging the status quo. How can the Global South, in its quest for fairness, really look at alternative cooperation methods and modes? So I'm going to hand over without further ado. You have at least 10 minutes.
I'll still start with the protocols, even though I don't see the ambassadors with us. His Excellency, the Ambassador of the People's Republic of China to South Africa, Wu Peng. His Excellency, the Secretary General of the Africa Continental Free Trade Area Secretariat, Wamgelemene. The Deputy Director General of Trade at the Department of Trade, Industry and Competition, Ambassador Xolile Mlubi Peter. The Chief Executive Officer of the South African Institute of International Affairs, Elizabeth Cyril, distinguished colleagues and fellow scholars and practitioners of trade and economic policy. A very good morning to you all. It is my distinction this morning to present some research that we at the South African Institute of International Affairs have been doing. This work speaks directly to the evolving multilateral landscape and the rise of economic protectionism in global trade. It revolves around the question of what global South states can do to circumvent this new era of both tariff and non-tariff barriers. This challenge is compounded by limited cooperation, weak representation, and unequal participation within international governance systems. Institutions such as the International Monetary Fund, the World Bank, and the World Trade Organization remain central, yet global South representation and participation within them, particularly Africa, are still too limited and unequal. It was with this backdrop in mind that we've witnessed an extraordinary growth in trade relative to global economic output. The world to trade GDP ratio was around 20% in 1968, and this surged all the way to 63% as of 2022, but has slightly fallen to 57% as of 2024, with further expectations of a fall in 2025 amid rising tariffs and protectionist measures. This reality underscores the dual nature of a historically interconnected global economy, now confronting renewed barriers to free trade. A recent example, which we've all spoken about this morning, was the recently announced liberation tariffs by the United States of America, which came into effect as of the beginning of this month and have affected more than 90 states going forward. Separately, there are also ongoing discussions right now within the European Union regarding the use of the Carbon Border Adjustment Mechanism, also known as CBAM, in terms of reutilizing its revenue so as to give it to domestic producers. Simply put, CBAM is supposed to work as a tax, but currently there are talks within the EU to take that tax revenue and give it to domestic producers so as to basically boost their productivity. And what this demonstrates is that protectionism is on the rise, not only from the US side, but among many global North countries, particularly within the G20, as has been mentioned. It was with this backdrop in mind that if it would be implemented, it would further extend the protectionism that we're currently experiencing amidst the tariffs. And it is this context that our work tries to then identify strategies that we can take forward and sort of rethink how we can not only maintain multilateralism as it evolves, but find a way to push the needle so that we can identify the gaps that allow for sufficient international financial architecture reform. The paper I'll go through this morning will be very brief. I'll only go through the paper's main observations, highlight the central crux of how we came about with the paper, and then circle back to the points of consideration on what I think we must reflect on. I think these points speak to how the Global South can adapt to a changing international order without replicating the very same imbalances that they hope to overcome. And more so, I think it speaks to the practicality of geopolitical interests. To that effect, I'll run through 5 slides very quickly and hopefully essentially elucidate on some of the issues and some of the low-hanging fruits that can be utilized by Global South countries going forward. So if we turn to slide 1, which is essentially our main finding within the paper, as it's visually represented on the screen, there are 2 parts to it. On the left-hand side, you basically see a diagram of the World Bank and IMF voting percentages. What's worth noting there is the United States of America currently possesses just below 17% in terms of voting power, both in the World Bank and the IMF. If we were using a one country, one vote system, that would be the equivalent of 30 countries in both systems, and that just speaks to the height of inequality that is within the IMF and the World Bank. Not only is that inequality there in terms of voting percentages, but historically, the leadership positions of both the IMF and the World Bank have been selectively reserved for European citizens and the American citizens, respectively, with the World Bank presidency consistently going to an American citizen and the IMF directorship going to an EU citizen. What all of this shows is essentially some of the issues that we face within international architecture finance. And another thing worth pointing to, which is not on the screen, but would be highlighted, and an extension of this would be within the WTO, something known as the Green Room, which is the informal use of trade negotiations, which is predominantly, again, used by the global north. And what that then allows is they coordinate positions before engaging the wider membership. All of these measures have essentially meant one key thing, that international architecture right now, or global governance as we know it, is not equal. And they've led about to essentially what we can call a dual strategy from global south countries. This dual strategy is reform from within and reform from external, or reform from outside. By reform from within, I'm talking about reform measures which are within these multilateral institutions that are existing. A good low-hanging fruit of that is in 2018 and 2019, the Chinese delegation introduced 2 white papers within the World Trade Organization, which speak to essentially making it easier for low-income development countries to trade more. It was already mentioned that the use of preferential treatment, especially within economic global governance, when historically connected, is not something inherently harmful, and that is what China attempted to do. Secondly, we can think of the appointment of the WTO Secretary General as a symbolic nature or a symbolic gesture towards equality, that is Ngozi Okonjo-Iweala, and how that has definitely demonstrated the parts where African countries and other countries within the global side try to work from within. What does working from outside look like? There's a big debate about whether or not global south countries are complementing or creating alternative institutions. And though I don't hope to enter into this debate today, working from outside has essentially meant that the creation of alternative institutions or complementary institutions as we know them. Think of the African Infrastructure Investment Bank, think of the Belt Road Initiative, and more so think of AfCFTA, which is the African Credit Rating Agency that we expect to be created within the next month. There are other ideas which have been touted, also thinking of the African Central Bank, the African Investment Bank, among others. And all of these basically speak to what I've called the dual strategy. Work from within, work from outside. Work from within speaking to reforming multilateral institutions from within, work from outside speaking to trying to create alternatives or trying to create complementary institutions in that regard. The second point we will turn to is essentially depicted here in terms of engaging with the context, which is today's conversation is mainly about engaging in South-to-South cooperation. And what we've already spoken about speaks to this engagement of South-to-South cooperation. There's a lot of motivation that's already gone around the room in terms of why it's necessary, and I just want to highlight a few facts. Firstly, we've spoken about the conversion costs that happen when we talk about trade. Currently, African countries lose about $5 billion each and every year just on conversion, on currencies alone. Not only are they losing $5 billion each and every year, someone earlier mentioned how the interest rates are astronomically unfair. The interest rates for Germany on average are 0.8%, but the average African country receives 9.85%. All of these things, when put into the economic global governance ecosystem, speak to one inequality, which is basically the extension of global poverty, the extension of all these issues that we've spoken about. And it is with that backdrop in mind that we've then had multiple initiatives, such as the Belt Road Initiative, trying to booster all these issues. Not only have we had those, but we've also had the creation of an African Monetary Fund, an African Investment Bank, or the hopes of a creation of one so as to deal with this. And it is with that backdrop also that the African Central Bank is hoping to create one currency so that we deal with some of these low-hanging fruits going forward. And that leads us also onto the third slide, which essentially explains why the focus of our research has been particularly on Bretton Woods institutions. And it's a very simple answer. Bretton Woods institutions and the WTO were originally formed together. That is when people met up in New Hampshire. The idea was to create an ITO, which was to be the International Trade Organization. And because that did not come to fruition, we then reverted to the use of the GATT. And the use of the GATT then allowed these 3 complementary institutions to work hand in hand. I've already tried to demonstrate some of the linkages between developmental finance and how they affect trade. I've also tried to demonstrate some of the linkages with access to capital. And all of this is to say we're in one interconnected web where economic global governance relies on most of these institutions. I think what's very important and something worth considering is mainly the 4th slide, which we'll move on to right now, and speaks to the kind of questions that we should reflect on. I think the first question worth pondering on is, in our attempt to deal with the inequalities that exist right now, how do we go about creating complementary or parallel institutions without replicating the same imbalances that are already existing? Thinking of, as an example, We already have created BRICS, which is sort of a complementary institution. But one of the statutes within BRICS talks about the membership being maintained, or rather share ownership of the banks being maintained by 51%. But if we have problems with the United States, for example, possessing 17%, how do we make sure that we don't replicate the same power dynamic of oligopolies leading some of these multilateral institutions we are interested in? The second question worth considering is, since equal governance is something we care about, what can African states do tangibly to move the needle so as to motivate for their equal participation? I think it's very clear within the room that equal participation is very necessary. It's also very clear within the room that equal participation is something African countries want, but there's a question about what can African countries offer in return for them to be treated equally within the ecosystem, and that is something we need to find a way of motivating. The third question we need to ask ourselves is whether or not creating these additional institutions dilutes the power of multilateralism as we know it, or if it will add onto the or if it will add and strengthen our institutions. That is to say, by creating 5 or 6 institutions which are to help, are we strengthening multilateralism in and of itself, or are we diluting the power of multilateralism? And there's a big question that we need to ponder on in that regard. And the final question, I think, which is worth talking about, is whether or not the creation of these complementary institutions actually changes the needle. It is worth noting that the primary institutions of concern, the IMF, the World Bank, and the WTO, are the ones where policies are made. So if we're creating a G20, a G77, and we still need to lobby into those institutions, it becomes very vital that we don't work on one hand without working with the other. That is to say, the only way these institutions will help us at the end of the day is if we can push some of the issues we've brought up within those institutions going forward. In conclusion, I do want to highlight that there's a lot that can be said about how we reform multilateralism going forward. And ultimately, it all boils down to figuring out how we can make sure that these institutions maintain autonomy, finance themselves, and also retain ownership of themselves. That is to say, if global South states are to make the impact we want them to make, if global South states are to make the impact they desire to make in the international architecture reform, they must retain ownership. And for them to retain ownership, they must finance their own models, they must be able to speak to those models, and adaptation is just as important from global North states. The decisions we make today will determine whether our engagements strengthen autonomy, secure fair rules, and build genuine resilience, or whether we inevitably replicate the same issues we've tried to deal with. I offer these reflections not as an answer, but as a provocation for our discussions today. I hope the panels that follow will afford us the opportunity to reflect further on these issues as we collectively seek to understand the role we can play in advancing South-to-South cooperation within an evolving world order, where protectionism seems to be increasing to be at the end of the day. Thank you all, and good morning.
Thank you very much, and you've made my job very easy here. You've already welcomed the next panel. So I will ask our moderator and our 2 in-person panelists to come join us up on the stage. And I do believe that our 3rd panelist is online and ready. So just as a quick introduction, this panel will really focus on responding to global trade shifts, implications for Africa-China trade cooperation. And with that, I'll hand over to our moderator.
Thank you very much, Laura, and good morning. One of my favorite African expressions in these types of meetings is called all protocols observed. It's meaning that already a lot of the protocol has been observed and we will continue here. My name is Gustavo de Carvalho. I'm a senior researcher at SAIA, and today we have a fascinating discussion. We've been talking today about how the world is changing, how African relations with China is changing as a result of that. And I wanted to reflect that also our understanding of South-South cooperation is also changing. I'm originally from Brazil, but I've been living in South Africa since the mid-2000s. And I remember very vividly when I first moved to South Africa, discussions on South-South cooperation would rarely talk about trade. They would often talk about replication of ideas in terms of how development assistance and aid occurs. But today the world has changed. Primarily what we are talking about today is geopolitical as it is geoeconomic. And partially, I think this session, what it allows us to do is to build from what we've discussed so far, to build on the very interesting presentation that Musi just presented, to deal with the issue of how do we respond to global trade shifts and what are the implications for Africa-China trade cooperation. There's been a number of issues mentioned so far in terms of what are some of the challenges, but also what are some of the opportunities. How do we deal with issues of the imperative that we see at the moment of diversification of trade partners, not only in achieving new trade partners, but how do we recalibrate existing trade relationships, including the one that we have with China. We expect to see this year, for the first time, China-Africa trade surpassing the $300 billion barrier, which if we were to bring it in as a collective, in a fragmented space, I know, but if we were to bring in a collective, would already make Africa amongst the top 5 Chinese trading partners, perhaps even surpassing countries like Japan and South Korea. The session that we have today and what we've asked our speakers, who I'm going to introduce just now, they relate to all of those issues about how protectionism impacts Africa-China trade dynamics. What is the broader impact on African economies and China's global recalibration that we see? What are some of the paths to uphold multilateralism and build inclusive trade? And I think Musi did a great job in reflecting some of those issues. And how do we reduce vulnerabilities and create resilient regional value chains and create opportunities amid a global fragmentation, but as we've seen so far, a continental fragmentation as well. Allow me to introduce our distinguished panelists here. First, we have Dr. Zhang Youyi. He is the Deputy Director and Associate Research Fellow at the Center for International Knowledge and Development, which is part of the State Council's Development Research Center. His focus on international development cooperation, global economic governance, and development finance, with research spanning Southeast Asia and Sub-Saharan Africa. Next to me is someone well known for us within SIA and within this field is Dr. Cobus van Staden. He's the managing editor at the China Global South Project, which is an impartial media and analysis team that tracks Chinese engagement across the Global South. He's also a long-term research collaborator with SIA and holds research fellowship with the Stellenbosch University's Department of Journalism. Last but not least, Dr. Marvelous Ngundu. He is an international development economist focusing on Africa-China economic relations at my old house, the Institute for Security Studies. His research centers on Africa-China economic relations and broader development economics, building on prior fellowships in Germany, the United States, and South Africa. So what we will do now, and what we've asked each of the speakers, is to start this conversation with around a 7-minute Kickstarter, as a discussion catalyst, as we could call it. I'm going to give the floor first to Dr. Zhang, then to Dr. van Staden, and then to Dr. Ngundu, which will then open to some dialogue and conversations amongst ourselves, but also we will invite you, not only those participating here in the room, but if you're joining us online, feel free to send your questions and remarks. So Dr. Zhang, perhaps let me start with you and to allow you to reflect a little bit in terms of how do we respond to some of those global trade shifts, and what are your insights on the implications for Africa-China trade cooperation? Thank you so much, sir.
Thank you, host. Can you hear me? Thank you, host. Can you hear me?
We can hear you well, sir.
Okay. Thank you very much.
Fantastic.
Thank you very much. Okay. Thank you very much. Dear Ambassador Wu, dear Chief Executive Elizabeth, Many thanks for invitation of Saya. This is Yui from CIKD and also the Global South Research Center, newly founded in March 2025. So the Global South Research Center focuses on the research on development and cooperation of Global South. So it's my great honor and also my great interest to participate in today's meeting. But unfortunately that I cannot join you offline, but I will share my views with all of you. Actually, that the Chief Executive Elizabeth, she is a member of the Council of Global South Research Center. So thank you again for your support and also the support of SAIA. So I will briefly cover 3 points. The first point is that the global trade order is facing severe shocks, but from our point of view, that it still remains very resilient. Second, that as discussed by previous speakers, that South-South cooperation, especially in trade and investment, have made huge progress in the past decades. And so this serves our, this supports all of our global South countries to shoulder against the tariff war and the trade war. Lastly, that as the host mentioned, that what are the future directions or priorities for global South, especially China-Africa trade cooperation. So firstly, the global trade order, I think we do not need to mention that the rising unilateralism and protectionism have severely impacted global economic growth and destabilized the international order of trade. So I do not need to repeat all the previous comments. In our recent Global Trade and Investment Seminar hosted by the Global South Research Center last month, former WTO Deputy Director General Alejandro Cyril and also Professor Berto Hoffman at the National University of Singapore and many other attendants, they all agree that the tariff shocks under the second Trump presidency are more extensive and severe than those during his first term, and represented the single greatest source of uncertainty for the world economy. Despite all these shocks, we still argue that globalization remains resilient. So in recent years, that global trade and FDI have continued to grow. Between 2015 and 2024, global merchandise trade increased by approximately 47%, while trade in service grew by over 75%. In 2024, the share of exports and FDI in global GDP remained about 30%, significantly higher than levels at the end of the last century. Global trade and the process of globalization can withstand policy shocks from the new US administration, and globalization remains the trend of the future. So in the beginning, we try to bring some hopes and bring some optimism to the current global economic and trade order. Secondly, that the global South, in particular China and Africa, have achieved development and progress on all fronts in the past decades and maintains vast opportunities for trade and investment cooperation. The rise of the global South is reshaping the global trade landscape, laying a solid foundation for strengthening trade and investment cooperation among global South countries. In 2024, the global South accounted for over 40% of global GDP. If we look at the PPP terms, it's even 60%. In terms of trade, the merchandise trade of global South countries has grown around 5-fold since 2000, now representing 45% of the global total. From 1990 to 2024, the average annual growth rates of FDI inflows and outflows in global South countries were 10.7% and 13.4% respectively, both higher than developed economies. Now, global South countries attract almost 60% of global FDI. Industry-wise, the global South share of global manufacturing output and intermediate goods exports have also increased to over 45% and approximately 50% respectively. South-South trade has become increasingly important, and the global South is increasingly becoming an active participant and a co-creator of the new trade and development order. The sustained growth of South-South trade signifies a strategic restructuring of the global trade landscape, representing new cooperation models, industrial linkages, and a growing sense of autonomy, as argued by many scholars, and also we also share this view. And also, this also drives economic restructuring, job creation, and technological upgrade in the global south, particularly evident in China-African cooperation. Additionally, that South-South trade accounts for a steadily rising share of global trade. I think now is roughly 1/4 of global trade, but in 2033, according to some estimates, this will grow to even around 30 or to 35% of global trade, outpacing the growth rates of North-North and North-South trade. And some speakers just now mentioned BRI. So we all know that the intra-regional and inter-regional trade and economic cooperation within the global south have also deepened, such as the frameworks like BRI. They have played a significant role in driving economic growth. Although they can replace global trade agreements, they still provide huge opportunities for regional trade and economic cooperation. One turning point is in 2024, China's exports to BRI countries accounted for 44.5% of its total exports, surpassing its exports to G7 plus the EU, i.e. all the developed countries. So China exports to developing countries surpass its export to developed countries. So this is really a huge kind of shift. According to the estimates of the African Economic Research Consortium, China has become Africa's most important trade and investment partner, accounting for about 30% of some African countries' foreign trade and investment. Some flagship projects like the Mombasa-Nairobi Railway has boosted Kenya's GDP by 2 to 3%. Lastly, what are the future directions in China-African trade cooperation? How we collaborate with each other to shelter against the current tariff war? Three points. First, we need to pay attention to green transformation, digitalization, and biotech. These are the new frontiers for cooperation in trade investment between China and investment. Secondly, we should advance regional integration and connectivity. Many speakers just now mentioned about AfCFTA and also cooperation within African Union. So I think we can learn from the EU's experience and really downgraded the tariffs among African countries, say to 0%, and also we should all different regions within Global South should also strengthen exchange and cooperation. Lastly, that we should consider creating a China-Africa trade investment cooperation framework, so we can establish a non-binding common policy framework to focusing on facilitating open and well-aligned industrial policies to boost long-term investment and financing, promote localization, and encourage cross-regional cooperation in support of industrialization. These are the main points. I look forward to continue our discussion later on. Thanks.
And I think some of your last points, I like the fact that they're very action-oriented of what could it be done. I think the idea of creating this cross-union cooperation, trade investment commission between Africa and China, it's a very interesting one. And I think your points about how do we shield ourselves within the context of a global tariff war, but also how do we build up on already existing mechanisms, whether it is in terms of BRI countries, whether it is in terms of the existing level of trades and economic importance within the global south. So let me jump here to Quibus and perhaps allow you to build from what has been shared now and in previous sessions, but also in terms of what are your insights, once again, in terms of how do we respond to the global trade shifts. Thank you, Quibus.
Thanks so much. Thanks so much, Gustavo, and thank you to Saya and the Chinese embassy for hosting this event. It's really fascinating. So Dr. Zhang gave fantastic kind of high-level overview, you know, of developments. I'm going to go the opposite direction and go bottom up, and just provide you with three concrete, I think, fields that one can focus on as possible starting points for discussions on how a country like South Africa can make itself more resilient and via stronger trade with China. So the first one is electrification. So in the earlier discussions, we were talking about the price of power and its impact on a large smelter in South Africa, and the larger knock-on effects of this issue. We know as South Africans, of course, that the power crisis has been the defining crisis, I think, of South Africa in the last decade of South African life, and it's a crisis that remains with us. At the same time, during the same era as we've been going through load shedding and so on, China has established itself as by far, I mean by orders of magnitude, a leader on renewable energy in the world. China now makes up about 80% of the global solar value chain. China has invested more than 10 times collectively what Europe has invested in renewable energy. So, on all aspects from the technology itself to components to engineering and procurement to financing to all the entire value chain of green and renewable sustainable electrification, China is a leader. As South Africa kind of went through its power crises, we saw a very interesting trend emerging. Obviously, the South African government is working with China on different Chinese actors on various green electrification initiatives, as we were also mentioning during the previous talk. But what's also happening at the same time is that individual South Africans, like households, small businesses, the South African middle class, in 2024, imported the equivalent of about 4.3 gigawatts of renewable energy from China into South Africa. So that is the equivalent at that stage, it was the equivalent of a very large portion of South Africa's total installed capacity. We're also seeing similar trends in other global south countries. A country like Pakistan, for example, has been rushing forward, because they were facing a very similar power crisis. And they've also seen this private sector driven kind of somewhat ad hoc importation of Chinese solar equipment. So, that is sometimes, in the case of Pakistan, it's sometimes a bit of a chaotic process. The Pakistani grid can't necessarily handle all of this additional kind of solar capacity. There's some ups and downs. But the main point is that it is possible to particularly as we facing, the disruption of the global trade sector now, I think there's a unique opportunity opening for a very rapid increase in broad-based, fine-grained electrification in South Africa. And I would personally kind of humbly argue that this should be a national priority. Chinese solar producers are not only producing at a scale that we've never seen in the history of humankind, but also they are facing a lot of artificial barriers throughout some of their traditional markets. So, kind of as Chinese producers are facing all of these tariffs and kind of geopoliticized kind of resistance in markets in the global north, there is this unique window in the global south and in South Africa particularly to very rapidly move forward with a new paradigm of electrification. Once we have a lot of renewable power in place, then it opens a whole set of new options. Kind of we can mine crypto, we can start casinos, we can, whatever we want to do, right? Kind of like if you have a lot of surplus electricity, that fundamentally changes the economic equation. So that's my first point, very briefly, is that as the ambassador mentioned, there is an entire architecture of agricultural value addition already set up in China, particularly located in Hunan province, focused on not only facilitating agricultural trade from Africa, but in very innovative ways, also adding value to that trade and facilitating issues like, for example, training around passing Chinese phytosanitary regulations and training around currency conversions, like product beneficiation and so on. So, South Africans love rooibos tea, of course, kind of like it's South Africa's national drink. I was surprised to see that the new largest market for rooibos tea outside of South Africa is Japan, with China very closely behind it and South Korea also very closely behind it. So there is at the moment, there is this kind of uptake for rooibos tea consumption in East Asia. And, this is a little kind of example of what could be a large megatrend, especially if we don't only focus on the crop itself, or even if we don't only focus on first level processing of the crop, but if we immediately start, with the help of the architectures in places like Hunan, to immediately move towards widespread kind of product development. We have rooibos tea. We could have rooibos tea soap, rooibos tea facial cleanser, rooibos tea, kind of like canned rooibos tea to drink, etc., right? So, this is the next step. And East Asia is already signaling that it is willing to think about this and to consider it and to integrate it into their own lives. So I think this is like particularly agricultural. We talk a lot about mining beneficiation, necessarily, it's an important field, but I think agricultural beneficiation really offers low-hanging fruit, literally, but also really offers a lot of job creation opportunities. Actually, I think more opportunities of that than the mining sector. So I think it's a really key sector for us. Thirdly, and very briefly, there's a company in Kenya called Basigo that they build electric buses. They recently signed a deal with CATL, which is this mega huge Chinese company that produces electric vehicle batteries. And Basigo is now going to be integrating CATL's batteries into their own electric buses. It's now already a cross-border operation. They also operate in Rwanda. But they're also going to be cooperating on battery recycling. And it's part of a wider trend, I think, of building some of these like industries, like, for example, battery recycling, which is going to be a key industry as the electric vehicle future moves forward in Africa, locating it in Africa, but also like starting to look at importing from China, not as a zero-sum game of importing, like products that then, for example, keep local manufacturing from happening, but rather as a way, like using Chinese components to kickstart local assembly and manufacturing businesses that have a specific local market intelligence that specifically serves local markets in regions and key kind of like demographics within African society. I think there's a real space there for this. For example, in the mobile phone space, we already saw a company like Transsion, which is a large Chinese company, getting very significant success in Africa from producing phones that are particularly tailored to African conditions, like specifically to be able to photography for specific skin tones, like photography set for local light conditions. All of these different tweaks and optimizations, we can see very similar developments on the back of Chinese technology and components in e-mobilities, in agricultural applications, in a range of fields. So these would be not necessarily just Chinese products imported and applied in a local context, but co-created technologies where Chinese tech and skills and components are are combined into co-created opportunities where there's joint market development. I think this is a huge opportunity that could help make us also more resilient. I'll end it there. Thanks so much.
Thank you very much, Quibus, and I like this transition from the big picture to the small picture, because we know they talk to one another, and I think those aspects you've mentioned about electrification in Africa, we know this is one of the big impediments, not only for South Africa development, but for the continent as a whole, but also the change of technology in terms of how our transport is being geared towards the future, and in terms of the use of batteries, the technologies towards batteries, I think brings all of these questions about critical minerals and beneficiation processes of lithium. but also what type of batteries are we going to be using in 10, 20 years' time? Sodium batteries, other styles, and so on. But I think the agricultural issue, I think you bring a very important point to show there is an opportunity within that space to ensure that agriculture is not only seen as a low, I love the pun of the low-hanging fruit or a low beneficiation space, but also one that brings revenues, the one that brings jobs, and the ones that bring sophistication within the economies. And perhaps as a Brazilian, that always comes very clearly to me if we look into how the Brazilian agricultural market changed in the last 20 years, and a lot to do with the changes with the relationship with China itself. And finally, I think the issue about green the green transition, electrification, and so on that we are seeing, and what are the different opportunities we have, not only in terms of diversifying our sources of energy, but also finding new opportunities within our economic sector around that. So, Dr. Marvelous, let me bring you to this discussion and adding to all of those issues that are being presented, and really looking forward to hearing your insights.
Thank you, Chair, and Kiko for such insightful reflection, especially on the
We need a lithium one. Are you using Duracell batteries?
Yeah, your emphasis on domestic capacity is critical, especially on brain drain and technology spillover. I want to give a scenario of what made China to be now. In early 2000, when China started its high-speed rail project, it rose through domestic capacity by engaging into partnerships with companies like Siemens in Germany through foreign direct investment to come and build that rail, but not just be there as a supporter of physical capital, but China made sure that its engineers are involved in the design, in the implementation, and in the building. Fast forward 2010 to 2014, China had built over 11,000 kilometers of high-speed railway gauge, not using foreign direct investment, not using foreign technology, not using foreign skills, but using their own engineers, using their own technology. Now their footprints of that high-speed railway gauge is evident across all the global south. In Kenya, we have got the Mombasa, Nairobi, that was built by the Chinese. In Tanzania, we have got the Dar es Salaam, Dodoma, that was built by the Chinese. Now there is a project in Nigeria, 4,000 kilometers that they are planning to build there. But my question is, on all these projects, were African engineers, particularly for those countries that are mentioned, were they involved in the design of such? Were they involved in the implementation? Or it was just capital from China, engineers from China, implementing from China? 20 years down the line, can we be able to write our own story based on that? I don't know. Then the issue of agro-processing, quite critical again. Now we are talking of diversification, moving out from the high dependency on mineral in their raw form, and we are considering agro-processing as part of it. But the question is, do we have plans to engage partners such as China not only on exporting agricultural products in their raw form, but to partner with them on processing them here. Tea planted here, processed here, then the final product, that rooibos, should be exported from South Africa to Japan, China, as a finished product, not as a semi-finished product. This is the kind of engagement that we want, the South-South engagement that we want. Right. The presentation that just happened here, the challenging status quo, I want to build from that again. We need to understand our structural bottlenecks. We need to understand the context of our China trade. And I'm glad that the Ambassador Yu Ping here took a bold move, that's being a leader, to admit that the trade is imbalanced. But of course, he was modest to say the trade deficit is small. Well, relative to China, I understand where he's coming from. China is a big economic country. But Africa is a fragile country, financially constrained. 60 billion deficit can't be said to be small. That's a huge amount. We are talking of 50 billion average that is spent on food imports per year. And yet we have got a deficit with one partner of over 60 billion. That should tell us that the structure of our trade has a problem somewhere, and we have to rectify that. 2023, 26% of Africa's exports, of Africa's imports originated from China, against the 14% of exports. That's a gap of almost half. What is being exported to China, it has been acknowledged. There are mineral resources in their raw form. But we talk of mineral beneficiation day in, day out. What is it that is being done to pursue that, so that we can address this issue of trade deficit? Iron ore, chromium ore, slages, all types of ores exported in their raw form, and they come back in form of teaspoons, in form of all the household equipments that you think of, maximizing the trade deficit. Something that could be done here. So our engagement now should be more on partnership based on value addition in Africa, rather than export of raw materials for processing and manufacturing in China. We need to boost our manufacturing also here. Now China, because of the policies that it implemented in the early 80s, early 90s, 30% of the world manufacturing output originate from China, 30%, 12 percentage points above the US. That's massive. But we are talking about 20, 30, 40 years down the line. Can we be saying the same story like China 40 years ahead now? It takes a bold step of value, of brain drain in technology transfer, like what Cobus said. So I'll come on the last point. The last point is the issue of whether this new world order or this geopolitical and geo-economic situation can benefit or not benefit Africa. There are benefits. The issue of green industrialization that Cobus mentioned is quite critical, especially given that China dominates the global value chains in the green energy system. This is the time for Africa to generate its own solar panels, its own lithium batteries here in Africa. not for them to be processed in China, no, here in Africa. If you go by the Energy Agency statistics, 60% of solar resources in Africa, but only 1% of solar PVs are installed across all Africa. So we are lacking on a capacity of over 59%. So we need to engage deeply on green energy transition with China, especially on the issue of brain drain and technological transfer, so that a decade from now we can be capacitated enough to process our own within the borders of Africa. Thank you so much.
Thank you very much. And you bring some fundamental questions for our discussion. What is the model of development that we are looking at? How do we build expertise and skills within the continent? What is our intentionality processes and what do we want to achieve from that? But also, how do we learn not only from the existing trade, but also by some of the choices that China itself made within its own developmental path, which brings that fundamental question that I think you brought here, Dr. Marvelous, that is, what is our position within global supply chains? And what positions would we like to have, and what do we need to do to get to that point? Now, I have a few questions here, but I'm going to skip those because I think it's more important for me to hear from you, our participants that are joining here in Pretoria, but also those colleagues that are joining us online. If you have any questions or very brief comments, please, we are running out of time. Please just introduce yourself, who you are, which institution you're coming from. If it is a question specifically to one of the speakers, do so, but if it's a more generic one, feel free to do that. And once again, just while our colleague there just prepares, our colleague online, you are welcome to also add your comments and questions online as well.
Thank you very much for this very interesting discussion. My name is Tia Fourie. I'm working for S&P Global. If I hope I can ask two questions, it would be very brief, and I hope the first one is not unfair. I think one of the interesting comments made by the ambassador this morning is that investment by China is now dominated by the private sector. And if you look at the bilateral external debt levels from the World Bank, it shows that bilateral debt to Africa has been falling. And it's an interesting comment. I was just wondering, how is this financed, if you know, by any means, how is that private investment financed? The second question, and that is really a comment as well. So I know of 3 very key infrastructural projects that's being developed in Africa by China in conjunction with public sector partners and government. Simando's iron ore project in Guinea. There's Burundi, Tanzania, which is a railway quite long, ultimately probably with the objective, I think, to mine nickel. And then the Tazara Railway, which ultimately will also probably challenge the Lobito corridor for copper exports from Zambia and the DRC. My question to the Chinese delegates, any possibility to unlock this agricultural potential you are talking about when developing these railways? Is there a way that you can add additional value to them? Because this is basically for critical mineral exports.
Thank you very much. Do we have any other comments or questions here from the room? Online, I haven't received anything as well. So what I would do, just in the order that I see here, Dr. Quibus, Dr. Marvelous, and then Dr. Jean, if you'd like to make some reflections or respond directly to those 2 questions and comments that we've just received from our colleague. Thank you.
I can take a first stab. In relation to the financing of the projects, it's a very mixed and broad field. So I think there's a lot of models in there, and there's a lot of new models being developed. But in the first place, some of these companies, particularly in the field of like electrification, for example, they would still work in some cases with Chinese state banks, to provide some of the financing, and then Chinese private banks as well. but we're increasingly seeing an attempt to try and move away from increasing large amounts of sovereign debt, simply because there's obviously everyone realizes there's a limit to how much the continent can absorb. And there's an increasing move towards experimentation with different forms of public-private partnerships, which increasingly also include an equity stake. So, like before, like a lot of, particularly in the infrastructure space, there was a lot of kind of project financing and project, provision that then basically ended at the end of the handover. Now there's a move much more towards forms of deal design where and this works better in some fields than others, but designing deals that immediately provide some form of revenue generation, and then where cooperation of the asset helps to pay off that asset and helps to build local capacity, and then there's a kind of a phased kind of handover. We're also seeing increasingly a more equity investment actually in ongoing operations. So, for example, in the Lekki port in Nigeria, for example, there's an ongoing and semi-permanent kind of position from a Chinese operator in as part of a triangular relationship with African actors and a European investor. So yeah, I think I'll leave it there.
Okay. Yeah, that's a critical question. Thanks so much. So yes, we have seen a change since 2010. We know prior to 2010, the Africa debt structure used to be dominated by the development finance institutions, and these loans were advanced mostly on concessional basis, understanding the state of the African nations in terms of their fragility, in terms of their low income, and in terms of their development status. But since 2010, there have been rise of debt from the private financiers. You are right. And bilateral and private, China dominate. Bilateral loans and private loans, China dominate. And I agree with Kobus that the methodology of lending is not yet clear, but I can talk from a specific example that is widely known. In Angola, for instance, where the Angola model is being used. So loans are exchanged, loans meant for infrastructure development are exchanged for oil. That's why you see that Angola is the largest exporter of oil from Africa, not the largest exporter only, but by value. Angola is Africa's largest exporter to China. 25, if not 21%, but over 20% of Africa's exports to China, they originate from Angola. Then about 13 to 15% they originate here in South Africa, and some they originate from DRC, which you indicated also the prevalence of Chinese investment, not disputed. They've penetrated the cobalt and the copper market. And this aligns, by the way, with the China's current initiative of green energy transition. Cobalt have indicated that now 80% of the global value chains are being controlled by China. So what I can derive, I wouldn't want to say that the Angola model could be working so in other countries, but I'm saying with certainty that in Angola that's the model that is predominantly used. Thank you.
Thank you very much. And Dr. Zhang, would you like to make some final comments and remarks? I think not only about the question that we've just heard, but perhaps from the other speakers' presentations too.
Thank you very much. I think it's a great panel. And so regarding to the two questions, first, from my point of view, that it's a good sign that Chinese private enterprise has been more active in Africa. And regarding their financing models, I think they are beyond the traditional financing loan-based kind of financing model, and they have explored innovative ways like PPP, BOT, and also other financing from other sources. And also, as mentioned by other speakers, financing from different sides, trilateral cooperation. So I think it's a good sign that we see more innovative financing models, and we see more Chinese private kind of participation in Africa regarding trade and investment. And regarding the loans, I think today we did not cover this is not our main topic. I think for the official bilateral loans, China ranked a bit higher among all Africa's official creditors. But for the private kind of financing, private loans, I think it's still dominantly from Europe and from the West, relatively high interest rate. So we can figure out the data from the World Bank. Regarding the value addition from China Africa Agricultural Corporation, I think this is really I think there's a vast opportunity there, and also, for example, that coffee from Nigeria, from Kenya, from Ethiopia, they should have a big market in China. The issue now is how to unlock all these opportunities. I think we still have some kind of bottlenecks on both Africa and the China sides. And I think now is the time for us to really figure out what are the bottlenecks. Because we have mentioned this issue for many years. But how do we dig deeper into these real problems on the ground, and how to solve the bottlenecks on both Africa and the China side, so that we can see increased African agricultural export to China. We all know that China hosts many import kind of events, and also we encourage more African enterprise, especially in the agriculture sector, to attend all these expositions and events, so that we can see more and more kind of agricultural export from Africa to China. So thank you very much.
Thank you very much, and I think you brought an important set. I think, yeah, you can still hear me, where you speak about how do we unlock some of these opportunities, and that's what our next session is going to be talking about, on unlocking sectorial and strategic opportunities. But on that note, please join me in welcoming this fantastic panel. It brought a lot of insights, a lot of food for thought, and I'm sure many of these issues will be discussed in the next session as well. Please, let's give them a round of applause.
Thank you very much. Can we have another round of applause for our panel as they make their way back to their seats? Due to time constraints, we're going to move quite swiftly on to our final panel of the day, and I will welcome our final panelists onto the stage and hand over to the moderator for the session.
Thanks very much, Program Director. Thank you very much. I hope we can all hear me. Interesting discussions. As the Program Director indicated, we're kind of running out of time, so we'll try to make it as quickly as possible. So let me start by welcoming our panelists. I'm joined by Mr. Wolfie Brady, the manager at the Agriculture Business Chambers of Commerce of South Africa. I'm also joined by Mr. Du Chichi. Yes. who is the executive vice president at the Bank of China, Johannesburg. I'm joined by who is the trade facilitation expert at the Organization of Women in International Trade. Did I get that correct? Thanks. So our panel, as Gustavo mentioned, we're looking at unlocking sectoral and strategic opportunities through the AfCFTA and Africa-China Economic Cooperation. I should switch. So we're looking at unlocking sectoral and strategic opportunities through the AfCFTA and Africa-China Economic Cooperation. So as you will have observed, our panelists are mostly from the industry side. They directly deal with the private sector, and they kind of have a first-hand experience of what is happening, the impact of all these trade uncertainties that we're seeing, particularly Wolf. I believe you're seeing that firsthand in the agriculture sector. You, Chengi, you have been involved with women traders. So we'd like to see how both the FTA and the Africa-China partnerships can help in all these aspects. So without further ado, let's dive into the questions that I had for you. I'll start with you, Wolfie. And so looking at how the tariff shock, if we can call it that, the impact that is having on South Africa. Let me be specific with South Africa, and the response of the South African government. I think one of the strategies is to try as quickly and as much as possible to diversify in terms of where we can send our exports. How do you see this strategy working? Are we too late for trying to push this strategy? You can speak from the perspective of the fruit industry or the agriculture industry. Take it away.
Thank you. Thanks, Joseph. Thank you very much. And nice to have the opportunity to participate. Thank you very much, Elizabeth and Saya, and to the embassy for the opportunity to be here. I think that, you know, in the context of America, America is only about 4% of our agri exports. When you get into that, into subcategories, there's a lot of obviously exposure that's hidden, like macadamia is 38% exposure, wine is about 18%, fruit juice also just under 20%. So there's different levels of impact. But in terms of the diversification, you know, a lot of time and attention has actually gone onto the AfCFTA in recent years in negotiating it and landing it. In fact, not many people are aware that SAC actually had a moratorium on new trade agreements in 2023 for just that reason, because it consumed so much time and attention to get the AfCFTA to where it is. And it's remarkable. It's the largest agreement outside the WTO. So it's a remarkable agreement. But what it has meant is that in South Africa's case, a lot of focus went on landing that, which makes perfect sense for us. So 44% of our agricultural exports go into Africa. A lot of that is grains, but admittedly, it is still 44%. Europe is about 19%, Asia is about 21%, China currently is about 5.5%. And in terms of diversification, you're quite right. The problem with agricultural products is that you need phytosanitary protocols, pest and disease protocols. You need those in place. And then on top of that, you also need to account. It died. Oh, it's back to life. You need to take into account consumer preferences. So for example, in certain countries and markets, consumers are used to a particular type of apple or pear and a particular even color. And it's very difficult to switch markets very quickly. You have to, even if with the protocols there, you have to have buyer relationships, supplier relationships, etc. Our estimation has been that for many of our members, to pivot, let's say, and diversify away from the US is going to take 1 to 2 seasons, 1 to 2 years. And in any case, in the markets where you wish to now go with the product, you can't flood those markets and distort the prices. And in Middle East and Asia, where we don't have any trade agreements yet, there's new presence of South African agriculture in those markets. So we are starting to build and expand there. So we're not at a point where you can really push a lot of product into there. So in terms of being too late, I would say from the business side, we were very keen on trade agreements with Asia and Middle East from even 5 years ago. But a lot of focus went on AfCFTA and also on localization and developing, reindustrializing South Africa. So we understand that, but we do feel a sense and have felt a sense of urgency for a while for governments on our side to negotiate in Middle East and Asia. Let me stop there.
Thank you very much. So in terms of the government policies to try to do those negotiations, is it your view that there is enough urgency that is taking place in that regard?
Thank you. Yes, most definitely. We've seen this even coming from last year before the American adventure started. We saw an urgency, a sense of South Africa being once again an exporting, trading nation and a greater emphasis on that. And it's something that's most welcome because in the agri sector, we're one of the few sectors that runs a positive trade balance with most of the trade partners. We're expanding. Most of our economic indicators are positive, employment, investment, etc., etc. In fact, our largest constraints have been really logistics and some of the other issues around energy and roads and fertilizers. But yes, we definitely feel that now we have been in negotiations and discussions with government on a weekly basis since the beginning of the year, largely with the American adventure, and then also with other areas of engagement around some of our traditional trade agreements. And SACU is doing a study at the moment looking into how can we better utilize our current trade agreements and what can we get out of new trade agreements in Middle East and Asia. And we believe as a chamber, we would say there's a need for a parallel track. We don't see a pivot necessary away from Africa, Europe into Middle East and Asia. We would rather like to see a parallel track developed for Middle East and Asia, where expanding production goes into those markets. So we retain our high value traditional markets in Europe and Africa and what was or maybe still will be the US market. And then we keep moving into new territory as well. Because we believe that the sector has much room to expand. There's underutilized land. There's land that's in state hands at the moment that could be released. So let me stop there.
Okay, thank you very much. Tangi, let me turn to you. I want to bring in the women's perspective. So in your view, looking at the current challenges that we're seeing on the international trade front, what are the most significant challenges that you're seeing that are preventing African businesses, particularly those of women traders, from fully benefiting from the AfCFTA initiative? And just to add to that, maybe how do you see these challenges being addressed, say, through the protocol on the women and youth in trade, which I believe has been adopted but has not been fully ratified by many countries?
Thank you, Joseph. I would like to...
Sorry, okay, can you start again? Yeah, we can hear you now.
Okay. I was just saying thank you, and I'm standing on all protocol, and would like to thank you for this opportunity to share the issues that are relating to women and trade. But I would like also to locate this in the backdrop of this geopolitical uncertainty that is also impacting on women And also, I want also to locate it within the context that as women, it will take us 123 years to reach gender parity, as disclosed by the World Economic Forum report this year. So why am I talking about all this? In order for us to reverse the situation and to, in fact, to mitigate the situation, and also to ensure that this period of 123 years is mitigated, we need to look at how we can actually reverse what is currently happening. And in the context of the geopolitical tension, what do we do for our women? What do we do as women? How do we position ourselves as women? And the great answer is that already there's the protocol on women and on women and youth in trade that has been rolled out by the AfCFTA. How does it work? Obviously, it will center around economic empowerment as an avenue on how we're going to mitigate all these factors that are facing women. You know, in any war, women are actually the victims. And so it is important for us to ensure that as women, we are not left behind as envisaged by the AfCFTA, which is an inclusive and deep agreement, which saw that women are usually left behind, and it actually foresees through the trade agreement, women as trade is supposed to be inclusive, uplifting women in the process. And now coming directly to your question, how is that being done? We're looking at trade facilitation, and the question asks about challenges within being faced by women in trade facilitation, challenges faced by the women-owned businesses as regards a trade facilitation. What we should remember is that to an average person, when we're talking about trade facilitation, it would appear that they have got an average trader in mind. But what is not usually said is that these facilitation reforms or inroads, they are usually blind to women businesses and women and MSMEs per se. So what we are calling for is for a gender-sensitive approach to trade facilitation. And this is going to be achieved through the Annex 4 of the Trade Facilitation Annex of the AfCFTA. And within the geopolitics, what are we saying as women? We realize that China has been in the forefront of actually contributing to initiatives such as infrastructure in Africa. And in Africa, how have women actually been benefited? But I'm afraid to say the approach to all has been silent on gender sensitivity. It has been silent on about gender-specific trade facilitation reform. And this is why women will be left behind, despite that we have the legal provisions that are there to ensure that women move forward. They are not actually left behind. And maybe to zero in onto the specific challenges, we can divide these challenges into the behind the border and at the border. In terms of behind the border, one of the panelists spoke about it earlier on. Countries do have challenges in domesticating the protocols and rules that have actually been agreed upon. And this is not really surprising because, as we know, the AfCFTA is also premised on the variable geometry. So in most cases, countries have to look at what's happening within their domestic setups in order to see that there is alignment that will actually prosper women to move ahead. And secondly, there is the at the border challenges, the glaring absence of infrastructure that favors women, the infrastructure that is actually maybe, let me say, gender neutral is actually one of the challenges that is mitigating against a trade facilitation. And at this point, I must emphasize that the trade facilitation itself, it mustn't be taken for granted. And maybe as a cliche that where women usually talk about trade facilitation, what exactly we are talking about, we're not even talking about tariffs. We're talking about the NTBs, the barriers to trade that actually are stifling trade. And it is these NTBs and these other burdensome compliances that affect women. And without addressing these, the realization of lifting people out of people out of poverty could be a challenge. And let me stop there for now. Thank you.
Thank you very much, Sengi. And before I move on to Chichi, I think you've mentioned that you've talked about the infrastructure, the issue of infrastructure and having gender neutral infrastructure to facilitate women's trade. Can you just clarify a little bit what are we talking about here?
When we're talking about a gender-neutral infrastructure, it means that whatever infrastructure has been instituted, it doesn't have gender considerations. You look at our border post. I come from a landlocked country, and I must also make it that I'm not speaking on behalf of my government. I'm speaking as an independent trade consultant. When you look at the borders around Africa, you see that the infrastructure doesn't speak that there is consideration of women who come carrying children at their back, of women who have got limited education, and some of those customs and procedures are actually difficult to interpret, difficult to unpack for the lay people like women. And because of that, women usually find it difficult to navigate. And in this instance, I'm talking about women in cross-border trade. And these women find it difficult to navigate those borders because the infrastructure there is not gender sensitive. That's the other word. It's not gender sensitive. It hasn't been structured in such a way that it will promote women to trade. And that is actually not on, because as we know, 80%, 70%, especially maybe in the SADC of our women, they provide jobs through informal cross-border trade. So it's not an event which can actually be maybe dismissed or maybe be relegated to the footnotes of these infrastructure interventions. But it's something which should actually be looked at holistically in order for it to actually enable women to trade. It is also part of the enabled trade environment or business environment that we talk about when we talk about infrastructure. Our borders, our entry points, even the business or environment at domestic level, it must have those gender concerns in order to ensure that this aspect, this demographic of women who are traders, who are actually providing jobs, they are also considered and enabled in the course of doing trade across borders. Thank you.
Thank you very much. I think there's interesting insights on the role of gender and how we should be taking it into consideration when we are implementing the AfCFTA. So thank you very much for that. And let me turn to you, Chichi, whilst we are on the issue of infrastructure. Many, I think it did mention that the cost of infrastructure is too high in Africa, and this is one of the key bottlenecks that is there in the so maybe my question to you, coming from a financial institution, from the Bank of China, is what role is the Bank of China playing in facilitating financing of infrastructure projects in South Africa and Africa in general, those infrastructure that can help in facilitating trade, whether within the AfCFTA or trade between Africa and China?
Thank you so much for Dr. Madola. Actually, your question is about our co-development strategy for Bank of China. For better answer your question, please let me very briefly to introduce Bank of China and the BOC Johannesburg branch. And the Bank of China actually was established in 1912, and we are the most historic and internationally oriented bank from China. We present in 64 countries and regions. In African continent, we established our institution in 8 countries, including 3 representatives in Morocco, in Tanzania, in Kenya, and another 5 operational institution, full service operational institution in South Africa, in Zambia, in Angola, and Mauritius, and Djibouti. So among others, the South Africa, the Joburg branch is the largest institution of our group in African continent. And we established in year 2000. And in the year 2015, we appointed and approved by both central bank, PBOC, and the SARB as a unique, as a solely appointed renminbi clearing bank in South Africa. This is a key point. So back to your question, how to maximize Bank of China contribution to this continent? You know, the reality, we are very lack of networking and compare with other local, very good and very professional financial institutions. So the most effective strategy for a bank is try best to leverage the partnership with local financial institutions. It's our first priority. It's the first priority. And through this cooperation with local financial institutions, we can try our best to achieve at least two major tasks. The first one, as the gentleman raised the question, how to try our best to decrease the financial cost for the whole continent, for all industry, including agriculture. And secondly, how to help the participants in this continent to mitigate and manage the potential risks. It's our major tasks. If we can achieve those two tasks, I think our contribution to this continent and our contribution to the cooperation between African continent and China will be very successful. And for decrease the cost, the funding cost and the transaction cost, the most important thing is for us, the most important instrument for us, I think, is renminbi business. Renminbi business. Renminbi business, RMB business. Oh, RMB. Yeah, our currency. Oh, yeah. Yes. Why? Because if we compare with other major currencies globally, for example, the euro, the current euro interest rate around 2.15%. And US dollar current so far interest rate is around, if I'm not wrong, is around 4.3%. But meanwhile, renminbi, RMB interest rate currently only 1.5%. It's far lower than other currencies. So use the renminbi fund to support the local infrastructure and the investment will be very important for decrease the total cost for the participant in this continent. This is the first thing. And the second thing, the risk management, mitigation. Risk management and mitigation. Currently, based on our 25 years observation on this continent, this continent facing very important potential risks. First one is FX risks. And the second one, I think, is some countries are facing FX liquidity increasing. We can see the FX maybe shortage situation. What's the reason? The major reason, I think, is over-reliance on single currencies. So the best way, the best solution to resolve this, I think, is diversification from different aspects. For example, the financing, the funding side, we can more use other different currencies. It's better to match the trading volume. As our ambassador, Excellency pointed out right now, China now is the largest trading partner for this continent. So for the purpose to match the trading volume, I think I fully suggest we can use more renminbi in the different aspects, including the cross-border settlement, including the funding side. This is the very important thing. And meanwhile, intra the continent, I'm very happy to observe that under the African continental free trade area framework, AfCFTA Bank, the Africa Import and Export Bank, successfully initiated the local currency settlement mechanism, we can call it PAPS, Pan-Africa Payment and Settlement System, is very important. Can use more local currencies, not rely on only one currency. It's very good practice. And the Southern Africa, the Central Bank of South Africa, SARB, initiated the rand-based cross-border settlement mechanism. We can call it SADC RDGS, Southern Africa Development Community Real-Time Gross Settlement. And this rely on the rand, the South African currency. This is very important and very good. But between the continent with other continent like Asian Pacific, I strongly suggest we also can use other currency to diversify the settlement. I think we are gradually to mitigate the potential risk like the FX volatility, like the shortage of foreign exchange situation. So this is my suggestion. Thank you.
All right, thank you very much. Maybe just to, Laura, unfortunately I forgot my phone there. You'll let me know if I'm running out of time. Maybe just to follow up on the, I think you make an interesting point that as a strategy you have to increase the use of the renminbi in this financing arrangements. But maybe a concern can be that the same problems that maybe African countries have found themselves by relying on the US dollar to do their transaction may in future present themselves with the arrangement of using the RMB. What say you?
Yes, we have many ways. I would like to emphasize again, our strategy is collaborate with the local financial institution. For the financing side, we financing to the local bank in different level. For example, we focus on provide the low-cost fund for the multilateral financial institution like African Bank, like African Development Bank, and we also try to provide the low-cost fund for the each country's development financial institution, like in South Africa, like IDC or DBSA. And the third level, we also provide our low-cost fund in renminbi to support the mainstream commercial bank like the AfCFTA, like NetBank, other financial institution, because we are very lack of networking. And rely on the collaborate with local financial institution, we can leverage and amplify our contribution. And I think is the best way. On the other side, we also can provide diversified funding channel, for example, the Panda bonds. And we are doing that, and we are already successful to finish the 2 deals. In 2023, we successfully to help Egyptian government to mobilize 3.5 billion renminbi Panda bonds from China to support the Egyptian infrastructure construction. And earlier this year, the March of 2025, we also helped the African Bank to mobilize, to successfully issue around 2.2 billion renminbi Panda bonds with the coupon ratio only 2.99%. It's very cheap to support the trading, between across the whole continent, between China and Asia Pacific.
Thank you very much. And I'll just do one last round of questions, one question each. So I'll come to you, Wolf. Whilst we're still talking about China, from your perspective, as your sector or as the South African industries try to identify other markets and diversify, changes or reforms or government action would you like to see to facilitate that kind of pivot and to facilitate your ability to enter into this, not to enter into, but to increase your exports into this kind of market, not just to increase the goods that you're sending there, but also in a state that you have added a lot of value to those goods, as you have seen. Marvelous was kind of highlighting the importance of value addition when we export. Yeah.
No, thanks, Joseph. Yeah, I mean, we have a slightly different take on the value addition, because although we are lots of primary production and primary producers in our membership, we actually see South Africa's agricultural system, the modern agricultural system, as an entire ecosystem of inputs and services and aspects of production. So we actually see it almost as a subset of value addition, where to actually harvest that orange is value creation. So an enormous amount of activity by a number of service providers, from biotech to regenerative agriculture to all sorts of pesticides, plant management tools, et cetera, cultivars, breeding, a whole range of companies went into producing that orange. And then we transitioned to value preservation, where we need the cold chain to be intact until it gets to Tesco in the UK or Sainsbury, until it gets to a consumer in China. And I saw the beautiful displays last year at FOCAC. It was fantastic to see fruit given in a gift basket, so beautifully wrapped. Very, very nice. We learned a lot from some of those engagements. But it's a type of value addition. So, for example, not many people know that agriculture, according to BFAP, Bureau of Farm Agricultural Policy, is responsible for about 14% of South Africa's GDP when you include all the indirect value chain. So we say to government that every orange or apple or pear or kilogram of wheat that goes out to China, for example, is only the tip of the spear of a whole cloud of service providers and multiplier effects across a number of quite high-tech and advanced sectors that support that modern agricultural product. So for us, getting into a new market and expanding access into that market triggers this whole wave of multiplier effects back into the SA economy. And a lot of them tick off boxes that government is trying to do in terms of even reindustrialization or capacity, skills development, etc. There's a very traditional picture of farming. It's the tractor and the farm workers and the farmer, and there's seeds and fertilizers and you're done. But of course, it's a very complex ecosystem. And my answer to the specific question would be, and it's something we've actually put forward now within the business structures to some of our other colleagues from other sectors, is this is wonderful. We're pivoting, in a sense, to a more export-focused approach as a nation. Localization and reindustrialization are extremely important, but at the same time, we need to be able to carry more than one thing at the same time. We need to be export-focused, much more than we've been in perhaps the last decade. And to achieve that, we actually need to capacitate the machinery of the state. So we need more capacity inside trade and industry as a department, because there's a lot to do. And the AfCFTA showed us how demanding it is to negotiate these complex agreements. Then secondly, we need things like agri, for us, for example, agri-attaches in the correct places, in the correct key markets. We need to have trade intelligence pipelines between the embassies and between private sector here. We need to have capacity for the plant and animal health directorates at Department of Agriculture. You could double those tomorrow, and I think you might just make it. Within BRICS, for example, we put forward as part of the Agribusiness Working Group, as South Africa, a proposal that we process market applications for agriculture concurrently, because normally there's a queuing system. So if you're number 6 in the queue after pears and strawberries and apples, your avos might only get into the market 8 years to 10 years' time. It's normally a few years to negotiate every protocol for agriculture. So we said in BRICS, what if each country, member of BRICS, core BRICS that is, says we'll do 2 or 3 applications at a time. We then shortcut the process, not the integrity of it, but we shorten the timeline dramatically of intra-BRICS trade expansion for agriculture, that is. And this type of smart, nuanced export policy, I think, is very important. And for example, to have business to be able to interface with government and the export desk, the export promotion, trade facilitation desks. We need to be more effective and better resourced in our trade missions, our trade fairs, the intelligence that government gets from business and vice versa. And we're very pleased to see this new collaborative approach that's been arising since last year, and particularly the Americans have done us a favor. They've accelerated, as a number of speakers have said, and some of the colleagues at the embassy, that things have accelerated because of what the Americans have introduced into the trading system. And in some respects, I think it's going to actually turn out to be a bit of a blessing. But at the same time, one does not want to lose 4% of your agricultural export market for any reason at all. And we would like to think that we can still stay in the US market to some degree. It's not sustainable at the moment at the current tariff levels, but perhaps when this administration, the doctrine changes in a few years' time, or there's some other developments, who we'll see. But our business partners in the US are solid, reliable people that we've had good relations with over years. We've built up that market presence over decades, and they are equally frustrated, irritated, upset with these developments. And we have programs running with them where there's structures that have been put in place for many, many years. And now that we're entering the Chinese market, we're trying to replicate what we would do in any other market, trying to build that position into the market and build relationships in the market. And we're very pleased to have the Stone Fruit Protocol that is almost landed. And there's a few others underway. We'd had agreements on greasy wool. We had agreements around red meat. We know there's phytosanitary issues. That's another good example. We cannot access export markets to our full capacity unless our machinery in the background for plant health and animal health is solid, really solid. So it's nuts and bolts stuff, but that's I think one of the most effective ways to multiply the export process.
Thank you very much. I'm being told we have to wrap it up, so I'll just give you, Tengi, an opportunity for your final remarks, maybe focusing on you've mentioned. I mean, we've seen that in the case of China, they have eliminated the tariffs for African countries. How do you see that benefiting African women traders, and or do you think there's still some non-tariff barriers that need to be prioritized right now and addressed right now in order to really make a difference as far as women traders are concerned?
Oh, yes, thank you for the question. I think it must be on record that research has proven that eliminating tariffs on their own is not enough to actually spare trade to actually increase. There is need to address the NTMs, the NTBTs as well, so that the trade space is actually enabled. And in terms of China, we're looking at what they have rolled out in these other 33 countries, the duty-free, quota-free concessions that they've brought to other countries. If they can be, if it can be extended to other African countries as well. But this is against the backdrop group where Africa has improved its own inter-Africa trade. This is very important. First, as Africa, we have to position ourselves to be conversate with our inter-African trade, to have it, to increase it to levels whereby where we are actually joining these global value chains. Because I'm looking at when we're trading in China, we are going to do it through global value chains. So in that regard, we expect as women, and we expect also to write on our protocol on women and youth in trade, and also on the protocol on data as well, that we need to have our capabilities in the women's constituency enabled as well, so that by the time we go into China, we trade in China, we are trading as at par with each other. We are actually trading through the prism of African agency, and we're also trading through the prism, is multi-layered, of gender as well. So we'd like as women not to be bystanders and read about these duty-free, quota-free concessions, read about the Belt and Road Initiative. We want as women in Africa to participate and not to be maybe as cross-border women in trade, no, as MSMEs, as companies that are actually contributing into the discourse of Africa and Africa's accelerated industrialization. This is what I can say. Thank you.
Thank you very much. So maybe we only have time for 2 or 3 questions. No? Okay, quickly, please. Don't make them too long because we need to wrap up. We have a lady there. Sorry. Okay. Yeah, there. I know you already asked the question, but I see no other hands, so maybe we can.
Good afternoon. My name is Kuzo Malete. I'm a student from the University of Pretoria.
Is it working?
And my question is, how can the African Continental Free Trade Area reduce non-tariff barriers and tariffs that hurt women traders the most, such as complex customs procedures and high transportation costs? And what strategies would you suggest to promote women's participation in trade? Thank you.
Thank you. I take it that one is directed to Cheng. I don't know if you heard it. You heard the question?
Yes, I think I picked most of it. In as far as maybe improving women participation in the AfCFTA against the hurdles, the barriers of trade that she has mentioned, the fragmented customs procedures. I think we have what we call the WTO Trade Facilitation Agreement, of which most African countries are signatory to. But however, that agreement as well is not gender sensitive. But that doesn't mean we throw away the water together with the baby. What has been happening is to actually look at the Trade Facilitation Agreement in total and leverage it and look at it through a gender prism, whereby you are looking at a harmonization of customs trade procedures in order to make seamless trade and to have trade predictable. As you know that our women also suffer from time poverty, so it's important that when they get to our borders, when they get to our entry points, it's predictable how they will get there, and they can interpret the often complex customs procedures. And lastly, as FCFTA, we've been thinking about, there's been a talk of the continental continental simplified trade regime. And we have said as consultants that this continental simplified trade regime needs to be digitized as well being thrust into the digital economy. So we're looking at all those issues which are supposed to be actually channeled holistically in such a way that they will benefit the women. The entry points will cease to become a point of concern when they get to the borders. And also we're looking also at e-commerce as well, where we're actually lobbying and advocating for the de minimis principle, where is there to promote the e-commerce, which is actually presenting also low entry barriers into trade, low entry barriers into commerce. That is also part of the women economic empowerment. So I think we have with the necessary legal instruments. What is there for us is to actually maybe talk more about the AfCFTA, sensitize each other, and look at it, because those provisions, those legal provisions, which are actually being thrust on us by the AfCFTA, they are not self-automatic. There has to be a deliberate effort on us as the users of those provisions to ensure that we leverage them and they work for our women-owned businesses and our women and youth as well. So a lot of it's going to be about sensitization, and then unpacking the AfCFTA in simple terms, in simple languages. The trade information desk that are there at our borders are supposed to actually be helping our women, so that we also are part of the AfCFTA and women enjoy the AfCFTA. And kudos to the AfCFTA in that the protocol on women and youth in trade has got 5 years in which we can look at it and review it and see that it is actually working for us, so that everyone trades. And it should also ensure that trade works for everyone, and not only in Africa. Remember, Africa becomes the launching pad. We want also to go to America, want also to go to China. We want to be free. We want to actually be in charge of our destination as women and MSMEs in Africa. Thank you.
Thank you, Tangi. I think we have to wrap up, huh? No, she says it's the same question that was asked there. Thank you, panelists, for a very lively discussion. I think we heard from a wide range of perspective, women's perspective, agriculture, and finance. all very important aspects of the AfCFTA, as well as cooperation between South Africa, Africa, China, and the rest of the world. Thank you very much for joining us, and yeah, thank you. All right.
So you can stay there, it's nice background. No, please have a seat. All that remains for me to do is really to thank, firstly, this last panel, the panel before, but also I think the speakers at the beginning of this conference today. I think it's been a really insightful and also stimulating conversation. I thought it was really interesting the point you made, Wolf, now about the way in which you see agriculture, and I think it's also so important for when we think about mining. And I think the ambassador said, mining itself is not a bad thing. It also creates jobs, and there again, it's an ecosystem. So it's mining equipment, and it's manufacturing, and it's the inputs that go into. So I think we need to think a little bit more when we talk about value addition, even with, it's not really just about sort of taking gold and making jewelry, but it's also the broader upstream and downstream ecosystem in that regard. So I thought that was really, but I think it's been a set of really, really useful inputs into the way in which we begin to understand and process how the world is changing, and the requirements around realignment or rethinking both of our domestic strategies as well as the way in which we do foreign economic policy, I think. And we also recognize the multiplicity of actors that actually form part of that ecosystem. You got to be engaging with your private sector, your chambers, you got to be dealing with the guys who have the money, the important people, but also with policymakers and researchers who go and do the evidence base, as Muzi has done. Let me thank the Chinese embassy, the colleagues at the Chinese embassy, for a really always a very good collaboration with you in putting together really, really interesting panelists and bringing the colleagues in from China as well, albeit virtually. And then also to my team at SIRE. We put this together fairly quickly. But I mean, you wouldn't think that was put together fairly quickly, given the quality of the interventions. So also my colleagues in the back there, I won't mention them because I'll probably leave somebody out and then I'll have to explain myself. So I don't want to do that. But thank you all for participating. Thanks also to the online delegates. I'm sorry, online delegates, I can't invite you to lunch, but there is a really nice lunch at Koi Restaurant here at the Capitol, and all of you here, please do join us, and let's continue this conversation in the restaurant. For the online viewers and delegates, sorry, hope you have a good lunch or a good dinner wherever you might be, and please join us again. Thank you all very much, and you can clap for your both for your lunch and for the good inputs you've all made.
Thank you so much.